Good morning, everyone. Welcome to our morning schedule of indirect tax laws. In this, we are now into the hardcore GST provisions, and maybe henceforth the provisions would slowly convert from legal to procedural. But as of now, we are majorly into the legal part of our subject. So I welcome everyone in the morning session. I hope everyone is up, active, and ready to take up the challenge of the topics that are coming in front of you now. Yes, students, all set? Yes, everyone present here. Ankit, Geet, Sanjay, Yogesh, everybody all set? Yes, very good morning, Yogesh. Excellent. Yes, good morning, Geet. Yes, Sanjay, very good morning. Excellent. So let me share my screen so that we can take up this particular topic. So if I'm not wrong, last 2 weeks on Sundays, you had your classes on the topic of time of supply. Correct? Can you all unmute and have some discussion so that I will also feel that yes, all are awake and it is not there, you all have simply logged in. Yes, students, I want you all to distinguish out between time of supply, place of supply, and the present concept value of supply. Can anybody give me a comparative between these three concepts? And fourth, I will add nature of supply. So time, place, value, nature.
Time of supply is when the liability for a person arises to pay the tax.
Mm-hmm.
Place value of supply is on what value we'll be paying the tax. Taxable value क्या होगा उसका
ठीक
कैसे
है,
डिटरमाइन करते
ठीक है,
हैं और प्लेस ऑफ सप्लाई वहाँ जहाँ पे जिस प्लेस पे लाइबिलिटी वो अराइज होगी जब वो बेचेगा वो
ओके,
नेचर ऑफ सप्लाई इज लाइक वेदर इट इज एग्जम्प्टेड नील रेटेड या पे गुड्स है या सर्विस है
ओके। अंकित बेटा आप बोल रहे हो इको हो रहा है, मे बी बिकॉज यू हैव लॉग्ड इन फ्रॉम 2 डिवाइसेस। आपके यहाँ पे वो आपके डिवाइस इको कर रहे होंगे। I hope and nobody else is having this echo from my side. Is there
नो
any echo from my side?
नो सर
अंकित बेटा आपने शायद 2 डिवाइसेस से लॉग इन किया है ना, तो जब भी हम 2 डिवाइस साथ में रखते हैं तो वो आपके 2 डिवाइसेस का आपस में इको हो रहा है। सो आपको ये करना पड़ेगा, वन ऑफ योर डिवाइसेस यू हैव टू कैंसल द ऑडियो ऑप्शन, मींस नॉट ओनली म्यूट। आप जब ऑडियो से ज्वाइन करते हो तो आपके पास एक ऑप्शन आता है ऑडियो में, जहां पे आप ऑडियो सेटिंग्स में जाके आपका ऑडियो टर्न ऑफ कर सकते हो। सो मे बी फ्रॉम वन डिवाइस टर्न ऑफ द ऑडियो। ओके, now students, let us have this one very important 10 minutes deliberation, because this is the core of GST law. Now if you see, the entire GST law has been designed revolving around the concept, the ideology of supply. Now, if you recall my initial lectures, I had explained that supply is what? Supply is a deeming concept, I should say. Why I'm using the word deeming concept? Because there is no transaction like supply. See, supply is a very generic word. But if you remember my initial class, I had explained that we needed to merge all the different taxable events of our erstwhile indirect tax laws. Like for VAT, it was sale. For central sales tax, it was sale. In fact, for central sales tax, it was in the course of trade and commerce. Then for excise, it was manufacture and deemed manufacture. For service tax, it was provision of service. For your entry tax, it was entering into the territorial area. So all these different taxes had different taxable events. And as you can see, the earlier names were the specific names: sale, provision of service, manufacture. Now, when I needed to merge all this and make one tax, what was very important was to make one taxable event. Now, you can understand from this, it is very difficult to find a word which will include all the activities. We could have used the word then activity. So most, you can say, easy way out was to use the word as activity or as transaction. But this would have been too generic because activity, transaction are very open-ended words. Hence, to make a slightly more technical provision, instead of using a very open-ended word like activity, transaction, they decided to use the word supply. Also, this is drawn from your international VAT laws where similar word is used. So from there, we drew this concept and we took this word supply. But please understand, there is no transaction like supply. So basically, supply is a deeming fiction, whereby what we have tried to do, we means the legislature, that they have tried to inbuild all possible transactions in this one word, that is supply. So now, supply today will mean renting also. Supply today will mean training also. Supply today will mean sale also. Supply today will mean manufacture also. So everything under the sun is now supply. So supply is a very generic, a very open-ended word. And since this is a deeming fiction, if you remember, I had used one concept that supply in very simple words means all commercial transactions. So wherever you are entering into a commercial transaction with a commercial intent, which is over here called as in the course of business, that transaction, whatever be the nature, it may be the nature of sale, it may be the nature of barter, it may be the nature of relinquishment, it may be in the nature of uh, agreeing not to do something, anything which is a commercial transaction would be a supply. Now, once we understand this, that supply is so wide, and most important, supply is a deeming fiction. This you can understand from the schedules also, Schedule 1, Schedule 3, where because of the vastness, where many things were getting covered in supply, Schedule 3 comes in saying that, sorry, I don't want to tax few of these activities, so I will treat it not a supply. So that is what is Schedule 3, giving you a specific instruction, ki boss, these 6 transactions, don't consider them as supply. Not 6, sorry, today it is 8. Don't consider them as supply. And then Schedule 1 comes in and says that, boss, I wanted commercial transactions, but there could be some commercial transactions which could be without any consideration. But since they are happening in the day-to-day course of your activities, hence we want to cover them also. Thank you. Hence we want to cover them also, even though there is no commercial angle involved. What is the commercial angle? There is no money involved, there is no consideration involved, but we want to bring it to tax. We want to bring it to the radar, I would say, not only tax, mainly radar. Hence, we deem it to be supply. So this is how you can understand the vastness of supply. Now then comes the various limbs of supply. So once you decide that you want to treat something as supply, the next step would be determining the various limbs. First limb is whether it is supply of goods or service. So you can call it as classification of supply. Second limb is whether it is within the state supply or between two state supply, that is intrastate, interstate, which is the nature of supply. Third limb is, these two are basically about the characteristics of supply, whether it is of good service, whether it is within the state or it is interstate. Once they have decided the characteristics of supply, now they want to proceed further to start taxing it. And for taxing it, the first thing that they need to do is decide the rate of tax. Now, over here, you have to understand that how tax is levied. Tax is levied by broadly 3 mechanisms. One, on the basis of value, which is called as ad valorem tax. Two, on the basis of quantity, which is called as which is called as specific method. Three, on the basis of production capacity, which was earlier called as compounded levy scheme. Now I'll explain what these three methods are. So ad valorem we all know because presently our GST is ad valorem where the tax rate is linked to the value. But under the earlier excise provisions, you had the other two concepts also, that is the specific method and also the compounded levy scheme method. What was the specific method? The specific method was that instead of going by the value, we will fix the duty rate, the excise duty rate per unit. In fact, even in customs today, we have this method for some specific items where the rate of duty is given per kg, per liter, per piece. In case of cigarettes, it was on the basis of length of cigarette, so it was per centimeter. So this is how specific method levies tax. And then comes the third approach where instead of going by the actual sale, actual manufacture, we take the value, sorry, not value, we take the tax on the basis of how much is your production capacity. So under the excise law, there was a concept called as compounded levy scheme, whereby depending upon how much you can produce and not what you have actually produced and sold. Otherwise, excise was always on actual manufacture of certain items and removal from the factory. However, for few sectors where there was a huge scope of tax evasion, where there was very difficult to track those industries as to how much actual sales they are doing. So for such industries, they decided that we will fix up duty per machine. So if you have 10 machines, your duty would be, let us say, 20,000 per month into 10 machines because per machine per month was 20,000. Now this was irrespective of how much production you are doing. Now these are the three approaches for levying tax, out of which as on date under GST we have the ad valorem approach. There was a buzz in between that again over here the same sensitive sectors, the tax evasion prone sectors, we will bring it under the same approach of compounded levy scheme, but it is yet under discussion. It is not yet finalized. I don't know whether in future they will come up with this or not. But as on date, under GST law, the approach is only ad valorem. Now, whenever the approach is ad valorem, that is the rate of tax is levied on value or basis the value, there comes the relevance of this chapter. So you require this chapter of value of supply only when the rate given in your rate schedule is in percentage, because whenever it is in percentage, it is to be taken as percentage of value. So this is how you come to this chapter of value of supply. Other chapters like time of supply, which you studied in the previous class, is again very relevant because the moment you determine that yes, there is a levy, tax has to be paid. A very big question will come when this tax liability would trigger. Again, why this question becomes a relevant one? Because the supply concept itself is a deeming fiction. Two, a transaction of supply is spread or can be spread over different months. Now, our tax period is a month generally. In few cases, it is quarter, but otherwise, generally, it is a month. Now, if a transaction is spread over months, it becomes important to determine in which month you need to go and pay tax. So, to determine that, to fix that particular liability to pay on a particular date, you have the concept of time of supply. Similar provisions existed under service tax also. And in case of excise, it was straightforward. It was at the time of removal and even on captive consumption. So this is what is time of supply concept under any taxation law. Now, place of supply, if you remember, I had explained that place of supply is again a deeming fiction and it is there to determine, or I will say artificially fix what would be the destination state so that the state could get their share of SGST. So in order that the state is fixed who will get the share of S in the entire GST, half is S, that is the state's portion, the place of supply provisions are there. And obviously on that basis, then you determine whether the transaction is interstate, intrastate, etc. Now we come to this value of supply with this backdrop that when this value of supply chapter will be required, where the rate of tax given in the rate schedule is in percentage and the percentage is ad valorem. Ad means on, valorem means value. So it is those Latin terms that we use where ad valorem means on value. So this is how you come to this particular chapter of value of supply. Now under the GST law, interestingly, we have this one single section determining value, that is section 15. But along with 15, we have certain rules determining value, and we have also certain notifications determining value. Now, why you have the rules, why you have the notifications, and when to refer to what, that is what we are going to discuss. So let me take you directly to the provision. Now, if you see section 15, which is of CGST Act, and it is applicable to IGST Act because of section 20 of the IGST Act. Let me make this point clear. Out of all the discussions we had just now, only place of supply is something which is determined by the IGST Act. Rather, in fact, it is determined by the IGST Act solely, and all other acts like CES, etc., use the same provisions given by the IGST Act. But except place of supply, all other things like the definition supply, schedules of supply, time of supply, value of supply, all these things are not given in the IGST Act. They all are given only in the C and S. Then, by virtue of section 20 of the IGST Act, the 20 section of IGST Act says that we will apply all these sections of CGST Act for the purpose of IGST Act. So because of this, the IGST Act becomes very small. It only has few provisions, and the section 20 of the IGST Act copies all the provisions of CGST Act and makes them applicable even to IGST Act. Value is one of them, time is one of them. All ITC, all procedural provisions are all copied in IGST Act from CGST Act only. So it has not repeated the same. So for all these things, you refer to CGST Act only, which also equally applies to the IGST Act. Now, when you come to valuation, we have total 5 subsections, as you can see. Out of these 5 subsections, they have given 3 values in these 5 subsections. So 5 subsections are given and 5 subsections have given you 3 values. First value, which is applicable to 95% of your supply transactions, is the transaction value. Then the other thing is the value as per valuation rules. And to a very few number of transactions, very specific transactions, you have some notified value. Notified value means value which is given as per a notification. So broadly, there are 3 types of values on which you will compute the GST. So whatever is your GST rate, you will multiply it by this value. Now, whatever value you select out of these 3, we will call it as the taxable value. That is the value on which tax has to be computed, tax has to be charged. Now, this value, as I said, are 3. It can be your transaction value, or it can be the value as per valuation rules, or it could be the notified value. All these 3 are given in section 15. Section 15, subsection 1, 2, and 3. These 3 subsections deals with transaction value, and then 4 and 5 deals with the other 2 values. Now, when you are applying this section, applying means when you have to check that, okay, out of these 3, which value is applicable to me? The sequence is you'll first see subsection 5. If subsection 5 is applicable, you don't have to see any other subsection, no rules, nothing. If subsection 5 is not applicable, then you go to subsection 1. If you satisfy the conditions of subsection 1, then you will apply subsection 2 and 3 also because they are aligned with subsection 1. But if the subsection 1 condition is also not satisfied, then you come to subsection 4 value. Now, So sequence is subsection 5, subsection 1 read with 2 and 3, and subsection 4. So these three values will be taken by you in this particular sequence. Now, while determining this, we will also read in the same sequence so that you'll understand why I have given you this sequence and how this sequence is actually applied or applicable. So let us start. Who will read for me now? Today, who will be reading for me?
Okay, I will read that.
Please, Yogesh. So you'll first read subsection 5. So students, remember the sequence. While applying valuation, you have to first check subsection 5. Please read.
Notwithstanding anything contained in subsection 1 or subsection 4, the value of such supplies as may be notified by the government on the recommendation of the council shall be determined in such manner as may be prescribed.
Now, interestingly, what does subsection 5 says? Why we started with subsection 5? Because it has created an overriding impact. Now, whenever any section starts with this word notwithstanding, pay attention. The word that we use for such sections or subsections, wherever this word notwithstanding is used, is non-obstante clause. So where any provision in the law starts with the word notwithstanding, you call that provision as the non-obstante clause. What is a non-obstante clause? Non-obstante clause is that provision which supersedes, which overrides other provisions. Now here they have specifically given that subsection 5 will override these subsections 1 and 4. Why 1 and 4? Because the other two values are given in 1 and 4. And hence, for application, you should start with subsection 5. Now, what is subsection 5 provided? It says that the value of supply as may be notified by the government. Now, interestingly, what it says, for certain supplies, government will notify. Obviously, on recommendation of council, this we will ignore because that is common everywhere. That what the government will notify, that the value of some items which are given in the notification shall be determined in such manner as may be prescribed. Now, if you remember, I had already explained this, or I already told you earlier that whenever the law uses the word in the manner prescribed, it means you have to refer to rules, because prescription is by way of rules. This is in fact defined in the Act itself. The Act itself says that wherever this phrase is used in such manner as may be prescribed, it will mean prescribed by rules. This has been defined in section 2 of the Act itself. Now, it means that two things will apply together. One, a notification, and two, a rule. But how it will be applicable? Government will notify. That is, they will bring a notification in which they will mention the name of the supply. So they will notify the supplies. And what they will say, that for these supplies, there will be a specific manner of determining the value, which will be prescribed in a particular rule. So the notification should give you the names of the supplies, and the values of those supplies should be given by way of rules. This is at least what subsection 5 provides. Let me tell you, this has not happened fully. So maybe tomorrow you'll find a writ being filed against this, challenging this subsection and the mechanism how this subsection is used. Means subsection 5 will not be challenged, but whatever values are being prescribed under the provisions of subsection 5, they will definitely be challenged in future. Fine. For the time being, what you have to understand is that first you will check if there is any notification for which there is a specific provision or there is a specific instruction in the notification that these are the supplies for which the value has to be determined in a different manner. If there is such notification, then for those supplies, you will not refer the other subsections. This is what is subsection 5. So we call this subsection 5 value as notified value. So let us call this subsection 5 as notified value. Correct? What is covered in subsection 5, that we'll get to read as we proceed in this chapter later. So first is check, is there a specific notification covering your supply. If your supply is covered in any notification, your value will be determined as per what the notification prescribes. Fine. Now, if subsection 5 is not applicable, then you come to subsection 1, and subsection 1 says the value should be taken as the transaction value, which is your first value. So I said there are three values. First is transaction, second is as per valuation rule, third is the notified value. Now, if notified value is not applicable because there is no notification for your supply, then you come to subsection 1, and subsection 1 says, boss, now the value will be transaction value. But we will allow you to take transaction value as the value if some conditions given here are satisfied. Now, if you do not satisfy any one of the conditions given here, then you come to subsection 4, where the value will be determined again in a particular manner. So just read subsection 4 so that we need not come back to this again. Yogesh.
Where the value of supply of goods or services or both cannot be determined under subsection 1, the same shall be determined in such manner as may be prescribed.
Now, interestingly, both subsection 4 and 5 says that the value will be determined in such manner as may be prescribed, means for both subsections there has to be rules, and there are multiple rules which we are going to study henceforth. But the point is when which subsection applies. So subsection 5 applies where that particular supply is notified. Subsection 4 applies where you did not satisfy the conditions of subsection 1, which we are going to study now. So if you are not satisfying any one of the conditions, then subsection 1 says transaction value cannot be taken, because subsection 1 is allowing you to take transaction value, but with the condition you satisfy the conditions. If you do not satisfy, then you have to come to subsection 4, and from subsection 4 you go to valuation rules. So let us call subsection 4 value as the valuation rules value. So subsection 5 we are calling it as notified value. Subsection 4 we are calling it as value as per valuation rules. Now, what is covered in 4 and 5 that we are going to read further when we proceed with this chapter. But today we'll first discuss in detail what is given in subsection 1, and once subsection 1 is applicable, the value will be transaction value. What is transaction value and how to calculate, that is in subsection 2 and subsection 3. Start reading, Bida.
The value of supply of goods or services or both shall be the transaction value, which is the price actually paid or payable for the said supply of goods or service or both, where the supplier and the recipient of the supply are not related and the price is the sole consideration for the supply.
Now, what does subsection 1 says? It simply says that the main rule or the general rule is that your taxable value, that is the value on which tax is to be computed, is nothing but the value at which you have done this supply. So what is transaction value? See, transaction value is defined. It is the price actually paid or payable for the said supply. So in simple words, when you entered into this transaction, now what is a transaction? It could be a sale, it could be a service transaction, whatever transaction you are doing, which is a supply transaction. So for this transaction, you have fixed up some consideration. Whatever consideration you have fixed, it may be received by you or it may be received in the future because the transaction is on credit terms. Whatever it is, the price which you have fixed, in simple words, the consideration which you have fixed for this supply, that consideration is the transaction value, and that consideration will be taken as the taxable value. So subsection 1 says, take your transactions value, your transactions consideration as the taxable amount. That is what is subsection 1, and subsection 1 is saying take value as the transaction value, and transaction value is the price which is paid or payable for your goods or service. Now comes the conditions. When will subsection 1 apply? There are two express conditions given and there is one implied condition. We will first go to the express conditions and then you have to give me the implied condition. Implied means it is not expressly stated that you satisfy these conditions, but without that, you cannot go ahead with subsection 1. So what is that implied? You have to tell me what are the express conditions. So first condition is where the buyer and the seller are not related. First express condition. Second, price is the sole consideration. Now, why these two conditions are given? See, understand students, we have come from a generation. Now, generation means not generation of population. Generation means I'm saying the generation of taxation laws, where there was strict control, where everything was regulated by the government, by the department, to such an extent that there was a time where even the prices at which you will actually sell the goods in the market were regulated. The simplest example I'm sure you all would have heard or at least seen was petrol. Because petrol is the last thing which was deregulated by the government, and now the petrol prices are driven by market forces of demand supply. What is the international price? What is the international dollar exchange rate, etc. Now, importantly, there was a time where every daily necessity that you buy from the market, the price was regulated by the government. Now, that is what is called as a regulated economy. Now, at that time, when the prices itself were regulated, then you can understand how even taxation laws would be. They were very strict. We call it as the physical control regime. What is a physical control? Physical control means the government does not rely on what you are telling the government. The government itself will compute your tax and you have to pay the tax which the government means the various officers, inform you. Like there was a time up till few years back that this particular mechanism was there even in customs. In customs, whenever goods are imported, exported, you don't determine the value or rate. Everything is determined by the customs officer. They inform you the tax you have to pay, and then only your goods would be imported, exported. But this has also been now changed in customs. In customs also, we have come to the regime which is applicable in all taxation laws, which is called as the self-assessment regime. But self-assessment is or was not there earlier. It is something which has come up only after 1990s. Prior to that, your taxation laws were very rigid and they were under strict control. Now, when we shifted to self-assessment, which is also called as control through documents. Now today, in all taxation laws majorly, you will find that the government tells the taxpayer, the government tells the assessee, boss, you make your calculation. You determine what is the value. You determine the tax. Like in case of income tax, you do your computation. You determine what should be your sale price, your cost price. You apply the provisions, take whatever deductions are there, and then you determine and pay your tax yourself. File the return. We will check the return and see if we have any queries or if we find there is something in the form of tax evasion. So that is what was, what changed from the earlier physical control regime. We have come to documentary control. What is documentary control? Now government will check your documents, your returns, and after returns, maybe your books of accounts, everything, to determine whether whatever self-assessment you did was correct or not. Now that is what is seen in this concept also. This concept is the transaction value concept. Again, during the excise regime, when we were under the physical control and where there was a lot of government intervention, it was a regime where the tax was to be computed on a normal price. Normal price means an artificial price, again, indirectly determined by the government. Then first time in the indirect tax regime of excise, we shifted to the concept of transaction value, where they said, now we are shifting to self-assessment mechanism where whatever you determine, we will accept. Only we will check to confirm that whatever you did was correct or not. That is how the concept of transaction value came in. But When I allow you to determine it yourself, there is a possibility that few 1%, 2% unscrupulous taxpayers, few fraudulent assessees would try to misuse this provision by purposefully showing a lower value. Now, in order to protect the taxation law and provide an internal check, they have built in these two conditions. Now, when you will be able to do some setting where the buyer and the supplier have some relationship, only that is where you will be doing some gadbad in the valuation. Otherwise, see, if we are not connected, why will I be ready to charge you less price? Because that will be a loss for me. So only when we have some connection, we will charge a less price. Point number one. Or point number two, maybe we are not related. What we will do is, let us say you come to my shop, you want to buy a shirt which is worth rupees 5,000. You say, okay, do one thing. I will pay 4,000 through online, that is, which will be on the record. 1,000 I will pay in a different manner, maybe in cash or maybe by some other medium. What could be the some other medium? You can say that, okay, see, I deal in cosmetics, I'll give you cosmetics of 1,000. Or I'm a lawyer, I'll provide you some consultancy of 1,000. So the second way of tax evasion could be that people are showing lesser value on the record, because ultimately now self-assessment is document or record driven. So whatever is on record, whatever is on your invoice, whatever is recorded in your books of accounts, that will be taken as the basis for your assessment. So there is a possibility that people may forge the documents or people may purposefully show lesser value. But if you are not related, you will not leave the person with lower price. You want your full price. So what you will do is you will take the balance price in a different manner. That is where these two conditions are built in, which says that we will accept your value. That is a self-assessment you have done. Your value is accepted as taxable value. So your value is the transaction value. That is what you are telling us. Ki boss, I have done this transaction at X price with Mr. Vishal. We will accept that and we will take the tax on that value, which is the transaction value, provided you and Vishal are not related. Second, whatever price you are showing on the document is the only price you have received from Mr. Vishal. If there is a price which you have received in a different manner through a different route, then again, whatever value you are showing on your invoice will not be accepted. So, in order to avoid any type of unscrupulous, fraudulent, or tax evasion adjustment coming into picture, they have built in these two conditions. So now the provision is we will accept your value. Your value is the value that you are declaring, saying that, boss, our transaction has happened at this price. Now, what is the beauty of transaction value? Let us say I am doing the same income tax work for 100 people. Now, I am giving an example of income tax because right now it is the income tax season going on. You all are employees. You all are working in the same company, Mahindra and Mahindra, and in the same department, same position. So everything that you are getting in salary is virtually same. There is no much difference. Now, in such a case, what should happen logically? I should charge everyone the same price of, let us say, 10,000 rupees for your income tax computation and return filing. But the beauty of this provision of transaction value is it is not going by any assumption. It is saying that even though your service, like my service, is same to you, there can be different prices, and the law is so open that it is ready to accept price, whatever I'm saying. So if for the same computation I'm charging someone 10,000, 10,000 will be the value. Let us say if someone is my regular client, every year the client is filing returns from me, I may charge 7,500. If some person comes to me showing some financial issue, saying that, sir, I'm in very much financial distress, I may charge even 1,000 rupees. Now, in such a case, even though my service is same, even though my supply is same, still, if I have Now, most important point, this is genuine. There is no forgery, there is no fraudulent or adjustment. It is genuine. Then the law says no problem. For us, these 10 different values are acceptable because for each supply transaction, we have to determine time, value, place, everything independently. So for your transaction with Mr. A, value of A will be taken as taxable value. With B, B will be taken, C will be taken, D will be taken. And these values may be different, even though whatever activity you have done is replica. That is the beauty of this concept of transaction value. But to safeguard, then they have brought in these two conditions, safeguards, that one, you both should not be connected, and whatever price you are showing is the only consideration that you have received for this service. So there is no other mechanism of getting some benefit. If I satisfy both these conditions, then even though I'm showing 10 different prices, the law will accept. I will pay tax according to the prices which I have charged to each one of you. That is what is section 15.1. That is what is the concept of transaction value. In this, anybody has any questions, doubts, inputs, please let me know.
Even if it is free of charge given, that is acceptable as the price, as the sole consideration.
Now that is what is my point. So if it is given free of charge, now in fact I was going to ask that as the next question. So now if whatever I have explained is okay, then let us take your question. If somebody, let us say out of these 10 people, for one person I have not charged any price, and that person is not my related person, and obviously if I have not charged any price means I am not also taking anything separately, means genuinely I have not charged price. Let us say the person is in huge financial distress. He does not even have money to meet his daily necessities. So I say, no problem, boss. Anyways, you are my regular client. No problem. This year I'm not charging you fees. So generally, if I don't charge a price, now your question is whether it will still fall in 15.1 or I have to go to 15.4. Now in this, my first follow-up question to you is, if I'm not charging any price at all, will it still be a supply? Yes, Geet has pointed out the
No,
same
sir,
thing.
there should be a consideration, further consideration in the course of the business. Since there is no consideration, it will not be a supply, right?
Correct. So no consideration, no supply, or still there can be a supply without consideration. Yes, correct, Geet. There can still be a supply, which is Schedule 1. Now, interestingly, in Schedule 1, you have some specific transactions, out of which the second scenario, the para 2, is mainly dealing with employer employee and then transaction with your distinct person, transaction with your related person. So over there is one scenario where the transaction is with related person. Anyways, if it is with a related person, subsection 1 will not survive. But let us say we are talking about Schedule 1 transaction only and with an unrelated person, because Schedule 1 has multiple entries. Tomorrow some more entries may be added. So where supplier and buyer are not related, and it is also without a consideration. Now the question is, if this is a Schedule 1 supply, means it is taxable supply. Coming back to question, will this be covered in subsection 1? So I've modified uh, question of Sanjay with these pointers. Now I want you all to tell me whether now this will be a supply. Sorry, this will be covered in 15.1.
Sir, there is no price means the free of cost बोलते हैं तो
Correct. We
वहां
are
पे
talking about free of cost.
कुछ पे हाँ तो एक्चुअली जहाँ वहाँ पे कुछ पे एक्चुअली पेड या पेएबल ही नहीं रहेगा ना सर वहाँ पे कॉन्ट्रैक्ट
Correct.
सर्विस सर
So that is what is the point. So this is what is his question
then
also.
then it will not cover here, right, sir? 15 months.
Okay. So you are
So if
saying,
it is unrelated person.
obviously that is assumption. Otherwise, it is very clear because that is a clear-cut condition. So
Yeah.
now we are in a scenario where it is a Schedule 1 supply, but it is not a related party supply. Then whether it will be covered in 15.1
No,
means
sir,
his
because
question is whether no consideration is also to be read as that it is the sole consideration and hence 15.1 condition is satisfied. Answer is no. You are right. Reason is I said there are two conditions which are express and one condition which is implied. And you rightly pointed out this that the implied condition for applying 15.1 is that there has to be a price which is paid or payable. If there is no price which is paid or payable, so where the transaction is at nil value, it is a schedule 1 transaction means it is a supply, and we are assuming it is not falling in one of those scenarios where related party is there, so it is not for a related party. Now in such a scenario, whether section 15.1 will apply, answer is no, because the implied condition for 15.1 applicability is that there has to be a price. So indirectly there are now total three conditions for 15.1 acceptability. One, buyer seller should not be related. What is related? We'll see the definition. Two, price, whatever you are showing on the document is the final and the complete price. There is no other consideration flowing to you in any manner for that supply. And most important, three, there has to be a price. A free supply, a schedule 1 supply will not be covered in 15.1. Now, whatever is not being covered in 15.1, you have to determine the value as per valuation rules because then you'll end up in 15.4. So this is how you have to check whether 15.1 will be applicable or not. Now for 15.1 applicability, we have to check if the buyer and seller are related. Now who is related is defined in 15 itself by way of an explanation. Can you please read the explanation?
Explanation for the purpose of this act. Person shall be deemed to be related persons if such person are officers or directors of one another business. Such persons are legally recognized partners in business. Such persons are employer and employee. Any person any person directly or indirectly owns, control or holds 25% or more of the outstanding voting stock or shares of both of them. One of them directly or indirectly controls the other. Both of them are directly or indirectly controlled by a third person. Together, they directly or indirectly control a third person, or they are the members of the same family. The
Okay,
term
1 second. Now, what are the scenarios where we will be said to be related? Scenario 1, I am a company and you are one of my directors or officers. So company and director are related. 2, firm and its partners are related. 3, employer and employee are related. Now in these three, the relation is very specific. It is identifiable what the relationship is. After these three, you have next four where the idea is given, but maybe there could be some ifs and buts, out of which clause 4 is still better. Other three clauses are very open-ended. Now, clause 4 is wherever a person is having a stake in both of your companies, that is, a supplier is also company, recipient is also company, and in both the companies, any person is having a stake. Stake how much? At least 25% of the outstanding voting stock or shares. So let us say I am an investor, and I am investing 30% in company A, and I also have around 40% of shares of company B. Now, since in both these companies, I have a stake where I am holding 25% or more of your outstanding means the shares which are issued, and they are having voting rights. Now, generally, you all know voting shares are majorly equity shares. So, when I'm holding your equity shares, in such a case, clause 4 makes you both related. Now, what is the ideology of this? See, the ideology is simple. Firstly, gone are the days when we used to see more than 50%. That is there today, but that is only if you want to become holding subsidiary. But please understand, gone are the days where only a holding could dictate terms. Now, today, when we have such a huge stock market, what do you think that in companies like Reliance and Tata's and Ambani's are the owners, like we say Adani is the owner of the entire Adani group, we say Ambani's are the owner of entire Reliance group. Do they hold more than 51% shares? Answer is no. Their shareholding is not 51. Still, we call them as the owners. Why? They are owners. One, because maybe they have started, but today these companies are all public companies and listed companies where their shares are being traded on the stock market openly. But what happens is these people hold so much of the stock which gives them the controlling power, and hence we call them as the owners or the persons who are the lead in these companies. Now, gone are the days where you needed 51%. Further, it is also very interesting and important to understand. It is not that I individually should have entire 25%. What it says, any person directly or indirectly owns. So let us say I am only having 5% shares in company A, but my wife is having, let us say, 23% shares. So that is also indirectly owned by me. Now, today we all know tax planning, we all know income tax. That today, for the purpose of dividing, distributing our income, many times what we do is while investing in a particular company or a business, I myself do not make the investment in my name solely. Why? Because if I make the investment in my name solely, tomorrow the entire income will be taxed in my hands and there will be a huge tax liability. So many times we divide it between the family members. Now even we divide it between our friends group. So you will find that in many companies, there are some other persons other than the family members who are also holding 2%, 5%, but they are all in such manner holding them that effectively they have given all the rights to me indirectly. So this is how this particular point has to be read. So where a person directly or indirectly owns, and how much ownership you want? You want only 25% of the voting shares. So if I hold either directly myself or through somebody else, at least 25% shares of the supplier company also, of the recipient company also, then both the supplier and recipient will be called as related. Why? Because now by holding this 25% or more, I indirectly am controlling, dictating the terms of these companies. Indirectly, I am running these companies. And when I am running both the companies, then definitely the transaction between them may not be at the fair price because they will be both run by me as per my instructions, as per my, you can say, thought process. So definitely I will be influencing their prices or their transactions. That is where both these supplier recipient becomes a related person. Why? Because they are having a common, you can say, parent. Next, one of them directly, indirectly controls. Now see, until the word own is there, we are okay. The problem start when the word control is used, and you'll find that the word control is used even here. But here we were less, not so much bothered by the control part because we were more looking at the ownership part. But in all the remaining three, the only criterion is control. Now, this is very important to understand what is this control. So, what are these three clauses? One of them directly, indirectly controls the other. Both of them are controlled by a third person, or together they control a third person. Now, where the buyer, that is the recipient, and the supplier, these two are companies. I'm using the word company because generally all these things comes in companies only, but it can come in any entity. Now, if one company is controlling other, they will be related. If I am controlling both these companies, then both will become related. Or if together they are controlling company X, then also these two will be related. Now the question is, what is the meaning of this control? Control, I will substitute by the word influence decision making. So where a person, maybe because he has the power to appoint the directors, or maybe because directly, indirectly, he is having the voting rights, or maybe because he is a person like, see, many times you have promoters who may not be holding any substantial stake, but today also, whatever strategic decisions are taken, they are taken by them, or they guide or influence the decision. In such cases, such persons are said to be controlling that particular organization. Now, in case of, I'll give you another example. Companies is generally through controlling the board of directors because that is where decision making happens. In non-companies, that is non-corporates, let us say example of HUF. Who controls the HUF? It is generally the Karta who controls the HUF because that Karta takes all the decisions. So whenever we are talking about HUF, we have to see the Karta. Now, if a Karta is such that it is having control, or it is able to control two or three different HUFs, or maybe one HUF and one partnership firm, then both these will also become related. This is what is clause 567 saying. So that's why I said 567 is very open-ended and it is very subjective. But it is an important thing. Tomorrow the department may check this and challenge the value that you have taken. Then comes clause 8. Clause 8 says that you will be said to be related if you are members of the same family. Now, who are members of the same family? That is also defined. Let me just see if the definition is taken here. Is anywhere the definition of members of family? Ah. So who are members of family? That is also defined in the law. Means if these two persons are supplier and recipient, then also the transaction will not fit in 15(1) because members of family are considered as related persons. See, don't mix between relatives and related person. We are talking about related persons. Yes, they have covered family members in that, but they are not saying that we are covering relatives. So relatives is different. Like in case of income tax, other sources head, gift from unrelated persons is what is covered as income. Over there, if you see, it is mainly your relatives. Here, related person is not relatives. Here, you can say the relation is majorly business relation. Only in one clause, they have included relations which are personal relations. Please read the definition of family.
Family means the spouse and children of the person and the parents, grandparents, brothers and sisters of the person if they are wholly and mainly dependent on such person. Section 2, clause 49.
Now, what is this point? Now, we are used to this type of definitions from the income tax. Now, important point to be noted is in income tax, if you recall, different sections have different definitions. Somewhere they are only covering spouse and children. Somewhere they are covering spouse, children, and parents. And interestingly, there is this condition of dependency also. Now, important point to be noted is that for me, who will be my related persons who fit in this definition of family? First, my spouse and my children. Now, when I'm talking about spouse and children, the condition of dependency is not there. So even if my spouse and children are independent, now what is this dependency condition? Dependency means financially or for their take care, for their upkeep. If the person is dependent on me, like normally happens in family, one of the person is the bread earner and the others are dependent on that person. In that case, we say that the person is wholly or mainly dependent. But for spouse and children, this is not the condition. So, my spouse is always my family member or my related person for the purpose of GST. Similarly, my children, even though they may be having their own sources of income and they are in such a condition that they can themselves maintain, they don't depend on me for their maintenance, then also they are my related persons for GST. However, other than these two, my parents, grandparents, brother sisters, when they say brother sisters, it means your brother sisters, not your cousins. It will include your step brother sisters, but it will not include cousins. Now, for these four persons, parents, grandparents, brothers, sisters, the condition is they will be said to be dependent. They will be said to be related only if they are dependent on me for their survival. Because the word uses wholly or mainly. Now, what is this word wholly? Wholly means totally they are dependent on me. What is mainly? Mainly means they may be having some income, but that income is not sufficient for their survival. So they have to depend on me majorly. That is what is wholly or mainly. So when one of these conditions are satisfied or one of this relation exists, you become my related person and section 15.1 will fail. We will have to go to 15.4. So in the definition of related persons, we have these different relations which are covered. Now, two more explanations are given related to this. Please read.
The term person also includes legal persons, persons who are associated in the business of one another in that one is the sole agent or sole distributor or sole concessionary, however described of the other shall be deemed to be related.
Now, what does clause B says? That whenever you are reading the entire above definition of related person, person will not only means real or natural person, it will also means artificial persons who are having a separate legal standing. So all companies, all partnership firms who are having a legal standing, who are artificial persons, they are also to be covered in this definition because majorly business is done by these non-living entities only. So all are to be considered while reading this definition. Clause C is important. Many times people are misreading or misinterpreting clause C. Here the word agent, distributor is used. So people consider that now see every big company has agents and distributors because that is their distribution network. So people consider these agent distributor as related persons. No. Clause C says only when if you are my sole agent. Sole agent means whatever I am going to sell, all things I am going to sell only through you. Then you are said to be my sole agent, sole distributor, or sole concessionaire. If I have multiple agents, if I have multiple distributor, which is generally the normal scenario, then those agents, distributors will not be said to be related person as per clause C. Yes, if they fit in any of these clause A, they will be related. But only because they are my agents or distributor, that is not sufficient to make them my related person. So for making anybody my related person, the requirement is that they should be my only agent, only distributor. That is what is clause C. So coming back to 15.1, 15.1 says we will accept your price, the price which you are showing, which you are claiming as the price at which you have entered into this supply transaction. We will accept that, and that price will be considered as taxable value because that price is your transaction value. However, you have to ensure that you two are not related and this is the only price, you are not getting anything additional. Now, once 15.1 is accepted, 15.1 is, you can say, materialized, Now comes 15, 2 and 3 in the picture. So whenever you are accepting the transaction value, subsection 2 says you will have to add certain things in this transaction value if it is already not added, and you have to subtract certain things if it is not already subtracted. So subsection 2 deals with the additions, inclusions. Subsection 3 deals with the subtractions or deletions. Obviously, both these subsection 2 and 3 are with a precondition that if that amount is already included, then you will not add it back. Subsection 2 is only clarifying that these should be included. You ensure that this is included. Similarly, subsection 3 is clarifying, ensure that this is subtracted. If you have already done that, you are giving me the final net price with all the additions, deletion. Then again, further addition, deletions are not required. Now, in subsection 2, they have given clause A, B, C, D, E. We will start in a different sequence, not in their sequence, because there is no sequence required. All these are independent amounts. But just we will start in a different sequence. So we will start with D and E first. We'll discuss D and E. Then we will go to A, C, and last we will go to B. So these are to be added to your transaction value if not already added. Please read clause D.
Clause D. Interest or late fee or penalty for delayed payment of any consideration for any supply.
Now, what does clause D says? I'll first give you a practical example to understand clause D. Then I will link it with other provisions of the GST law which you have already studied. What does clause D says? Let us take an example. I am the seller of mobile phones. So mobile phones, let us say I am a distributor and you are the retailer. Now you buy 100 pieces of mobile phone considering the upcoming festival season, and you buy it on credit. I say that is fine. I am ready to sell it to you on credit, but the credit period is going to be 1 month. So you buy these 100 pieces from me. Let us say per piece is of 50,000. So your total bill is of rupees 50 lakhs. Now I have charged you GST already on this 50 lakhs bill of the mobile HSN code. So it is 18% GST. On this 50 lakhs, I've already charged you and I've given you 1 month credit. So you should pay me maximum by 11th, 12th of October. However, when this 11th, 12th October, that is a date of payment comes, I call you, you express your inability to pay and you seek for time. I said, okay, no problem. But now if you are dealing as per our original understanding and terms, you have to pay me some interest. You agree to that. Now you finally make payment to me on 25th of November. Accordingly, I charge you interest. Let us say the interest amount coming is rupees 25,000. Now, I may call it as interest. I may call it as late fee. I may call it as penalty. Call it as late charges. Whatever name I am saying is immaterial. The most important point is this amount is towards your late payment. Late payment of the consideration of this mobile phone transaction. Fine. Now, let us understand certain things. I prepared invoice today showing this sale of 100 mobile phones and I have charged GST. Now, the time of supply of this original transaction, let me call it as original transaction of original supply, is 12th of September as per section 12 of the CGST Act. But the time of supply is 12th of September. So when I'm filing the September month's return, which I'll be filing in the next month, on the 11th, I'll be filing GSTR 1 and on the 20th, I'll be filing GSTR 3B. I will discharge this tax. By that time, by 11, 12, you should have paid me the consideration, but you have not paid. You are paying me in November. Now, this consideration, what you are paying me, this 50 lakhs, I've asked you to pay me extra. So along with this 50 lakhs, which is the original consideration of supply, you are paying me extra 25,000 as late fees on, let us say, 20th of November. Now the question is, what will be the taxability of this 25,000? Importantly, whether this interest which I am charging to you is eligible for exemption in the exempt supply. Answer is no. If you'll remember, in exempt supply, there is an exemption for interest. But this interest is not exempt. Why? Because over there, the exemption is only for interest on loan, deposit, or advance. Here, the interest which I have charged you is neither for loan or deposit or advance. It is for you making late payment. So it is not covered in that exemption entry, first point. Second point, whether this has to be taxed separately as a new supply. This is what is now addressed by 15.2D. 15.2D says, don't consider it as a different supply. Because if I consider it as a different supply, if this 15.2D had not been the provision, I would consider it as a new supply of allowing you to use money. So this 25,000 would become a service because I'm charging you 25,000 for allowing you to use my money for extra few days. And for that, I'm charging you 25,000. And as you all know, the definition of service includes use of money. So this would have become a separate supply, a separate transaction with a separate HSN. However, because of 15.2D, the law says don't consider it as a different supply. Consider it as extra consideration of the same original supply of mobile phone. So because of 15.2D, what I will do is, you paid me 50 lakhs for the mobile phone, for which already time of supply had happened on 12th of September, for which I have already discharged tax in October. This amount, extra amount which you are paying, this will be firstly considered as the part of original supply because of 15.2D. Now, what will be the time of supply of this? This is the second point. This you have already studied in section 12 and 13 both, which says that for this type of interest, late fee, etc., the time of supply is the date when you actually receive this. So for this extra 25,000 which you have paid to me along with my 50 lakhs original bill amount, the time of supply is 20th of November. So the tax liability of this 25,000 extra amount will trigger in November, which I will discharge in December. Now, for this, what I have to do is, I have to issue you a debit note. And in this debit note, I will be writing the HSN of mobile phone only, not the HSN of interest. Because this is not a different supply, it is considered as the original supply's additional consideration because of 15.2. This is what is the impact of this particular amendment and this particular entry. And already for this, the time of supply provision has specifically covered this. And when you will study the records chapter over there, the debit note will also be covering this. So you may issue a supplementary invoice or you may issue a debit note covering this clause D. Is this clear to everyone? Any questions on this point of clause D? Students, any questions? Yes, Geet.
Sir,
Yes.
sir, अगर original invoice में multiple HSNs है तो it will be proportionately divided among multiple HSNs, right, sir?
Correct. Now that will be another point. If let us say original invoice had multiple items. You purchase from me televisions also, you purchase from me mobiles also, you purchase from me, let us say, items which are also of different HSN and of different rates. And for all this, you made payment late. So you are correct. In that case, if I am receiving this interest, I will be proportionately dividing it between all the HSNs. Correct?
Okay.
But the time of supply will be same. It will be the date of receipt. Correct? Student, just a minute, please. Yes. So Chitra says if this interest is charged under earlier law, it would still be included. See, Chitra, there is no requirement as to how this interest should be charged, whether under any law or it should be charged as per your terms of your agreement. So it is irrespective of whether it is part of any other law, like let us say Consumer Protection Act, or for that matter, any other civil law which requires you to pay the interest, that makes no difference. So far as most important is what? You have to see the nature of interest. If the interest has a direct connection with late payment of consideration. See, many times when the matter goes to consumer forum, the transaction may not be because of late payment or the award that you are getting over there, maybe because of bad quality, or because you promised something which you did not deliver, or there was some casualty that happened because of use of your product. When such complaints are there in consumer forum, and for that you are given some award or compensation, that is not covered in clause D. You have to check in order to be covered in clause D. Point number one, is it something for only late payment of the consideration? That's it. Now, you may call it even a compensation or a fee or late charges, that will make no difference. But the nature should be very clear. It should be only towards late payment of the consideration. I hope I've answered your question. So this is
Sir,
all about,
I have
yeah.
सपोज अभी मैंने सप्लाई किया था मार्च में सर.
हाँ.
ओके. एंड कंसिडरेशन इंटरेस्ट का लेट पेमेंट फी आया मेरा अगले साल फाइनेंशियल ईयर में, सपोज इन द मंथ ऑफ मे, तो वो टर्नओवर वो नेक्स्ट फाइनेंशियल ईयर का इंटरेस्ट का जो पार्ट का वो टर्नओवर में ऐड होगा सर। तो वो टर्नओवर में जो ऐड होगा वो नेक्स्ट ईयर के टर्नओवर में ही ऐड होगा ना सर, या
नहीं
फिर
नहीं,
पुराने वाले?
yes, yes. So see, when they say that it is considered, again, why this 15(2)(d) is important? It is important from all these perspective. It is not considered as a separate supply. First thing, let us decode it one by one. So it is not considered as a separate supply. So for you, it is not a separate line item in your books of accounts. It should be recorded as part of the original sale value of mobile phone only. Correct? Point number one. However, now an interesting point. Now we have time of supply provisions, which says that the time of supply is that date when you have actually received this amount. And obviously for this, the records and accounts provision says that you will have to prepare either a supplementary invoice or a debit note. Now, when I come to the turnover part, now question is, as per 15(2)(d), this interest is to be treated as part of original supply. And in your example, the original supply happened in one financial year, and I'm receiving amount maybe in the second or third financial year, right? Now the question is, it will be considered as turnover of which financial year? If you have to say, it will be turnover of the financial year in which that amount is received. Why? Because of time of supply provisions. But if you are seeing or asking me as to whether it should be considered as the value or turnover of mobile phone or of any other item, then my answer is it should be considered as mobile phone turnover. Means what I mean to say, when you are preparing HSN wise turnover, it will be considered as part of mobile phone. But when you have to find out your turnover for all purposes of GST law, like for registration, we have a turnover limit. For composition scheme, we have a turnover limit. Then for deciding whether quarterly or monthly tax, you have a turnover limit. For e-invoicing, you have a turnover limit. For QR code, you have a turnover limit. So where you are seeing turnover limit in this fashion, then because the time of supply triggers only when the amount is received, it means as per time of supply provisions, the transaction is to be considered of the further tax period. And since it is to be considered as of the further tax period, hence, for all the purposes of counting the turnover limits, it will be considered transaction of the further period. And in that fashion, you can say the definition of aggregate turnover, which is used in our GST law, it will be aggregate turnover of that financial year in which it is received. I hope I have answered your question.
Yes sir.
That is because of
मतलब
time of
HS
supply.
only for HSN कैलकुलेशन सप्लाई के टर्नओवर में ऐड होगा, बाकी के जो जीएसटी लॉस है वो एक्चुअल में जब रिसीव हुआ उस तब क्या ऐड होगा?
Because that is what is the relevance or impact of time of supply provisions.
टाइम ऑफ सप्लाई. Yes sir.
So time of supply basically decides कि it is turnover of which tax period.
Yes sir.
Correct?
Yes sir.
Perfect. Let us proceed. Now read clause E.
Subsidies directly linked to price excluding subsidies provided by central government and state government.
Read explanation.
Explanation for the purpose of this subsection, the amount of subsidy shall be included in the value of supply of the supplier who receives the subsidy.
Okay. Now, again, I'll link this with some other provisions of the Act. I link it with the provision or the definition of consideration. Now, if you recall the definition of consideration, the definition of consideration very specifically says consideration is what? Whatever you receive, the only requirement it has put is you should be able to establish the connection of this with a particular supply. So the definition of consideration says that the amount, which may be in monetary form, non-monetary form, or in the form of tolerating an act, whatever it is, that will be a consideration only if it is for inducement or for getting a supply or it is for a counter to the supply. So all those terms are used, which basically means that you should be able to establish that this return that you are getting, which may be in money form or the non-money form, is against that particular supply. Now, after that, the next part of consideration, which is relevant to this point, is the moment you have established that whatever you are getting is in relation to that particular supply, it has a linkage with that particular supply. Now, it is immaterial as to who pays this consideration. So, the second part of the consideration definition makes it very clear that consideration may not be coming from the recipient, it may come from a third person also. Now, this is where this clause E gets connected to the consideration definition. How? So, let us again take an example. I am, let us say, running a GST course. And for this GST course, I am receiving from you, you are the attendees or participants of the course. I am receiving from you a fees of 10,000, and there is a local body which is paying 5,000, because that local body has this specific provision that they will be uh, promoting these type of courses because they want the people staying in that particular local area to be skilled and trained. So they have made a policy that they will be contributing 5,000. So I'm charging 10,000 from you, and 5,000 I'm receiving from a third person, but for this same activity of running this GST course. Now, in this particular case, when I receive this, there is a possibility that since I'm going to receive this 5,000 from some other person, I have reduced the price of the course for you. And what I have done is indirectly, the word which they have used is I've given you a subsidy. You can call it as concession, you can call it as reduction, rebate, whatever. Now, why I'm reducing the price which I'm taking from you? Why I'm taking only 10,000 from you? Because I'm going to get 5,000 from some other person. So what does clause E says? Anyways, consideration will include any amount that you receive from any person, not only from the recipient. So it says that where there is a subsidy which is having a linkage to the price, means the subsidy is towards price only, then you will add that subsidy for determining your taxable value. So 10,000 I'm receiving from you, 5,000 that local body or agency is paying to me, but for this same supply. First, this has to be established that this 5,000 is for this supply. This 5,000 and 10,000 will be added, and the taxable value of this training will be 15,000, and I have to pay GST on 15,000. Now in this, they have made an exception which says that where subsidy is given by central or state government, you will not add it in your value. Logic is also clear, because even if I add it in the value, to that extent my GST will increase, and again GST will go back to government only, central and state. That is why they are saying where subsidy is given by center and state government, you don't add it in the value. But where the subsidy is given by a private entity, or for that matter, many times some NGOs or trust make a payment for somebody else's service, or even a local government is paying. This is very important. Even if a local government is paying, it has to be added. Center and state are very specific. It does not include local bodies. So where local bodies are paying this subsidy, you have to add it. Now, what is the meaning of this word subsidy directly linked to price? Understand this. There are different types of subsidies. Like there are capital subsidies. So many times, if you are setting up your industry in a backward area, or if you are entering into a particular type of business which the government or any entity or anybody wants to promote, what they will do, whatever investment you have done, maybe in the land, building, plant machinery, whatever, they may give back the amount to you, either whole or part. That is what is capital subsidy. So many times you have subsidy for many things. Again, in different states, they may reduce your light bill. So you first pay the light bill, produce it to them. They will give back 20-30%. They may refund back to you some local taxes. So there are different ways in which the government may extend the benefit to you. So the subsidies may be of varied nature. Here, what we will be adding back in this particular clause E is not any of these subsidies. It will be only the subsidy which is for price. That is, it has a direct bearing on price, whereby the government says, okay, if your price is 15,000, you only collect 10,000, balance 5 I will give. Government means other than central and state, or for that matter, any other body. So only where the subsidy which is given by an outside entity is related to your price. That is, your price is this much, you reduce the price, I will pay the difference. Then only that has to be added. This is what is about clause E. Now, this explanation is also important. What it says, for the purpose of this section, the amount of subsidy will be included. So we will include this only if it is received by the supplier. So what it says, the amount of subsidy shall be included in the value of supply of the supplier who receives it. I read it in a different manner. I say that it will be added only if the supplier receives it. I will say, sir, what it means. I'll give you an example. Again, see, the examples which I'm giving is subsidies of central or state government, but just to explain you this point. Now, we have this gas subsidy, whereby we buy every month the gas cylinders. They come to your house, and let us say the gas cylinder is charged 1500, but the government has given some 6 or 9 cylinder subsidy. So for the first 6 or 9 cylinders, you get something like a cashback. So in your account directly 300-400 rupees is credited every month. So on one side you pay to the supplier 1500, and immediately next day or day after 500 comes back to your account. Now this is also a subsidy, but importantly, this amount is not received by the supplier of this gas cylinder. It is received by the consumer. So what is clarified in this explanation is that only the subsidies which the supplier receives will only be added in the value. And that is logical, because please understand, from this gas cylinder example, the price of gas cylinder, the full price is 1500, and supplier has taken entire 1500 from you. But the government wants to give you the relief. So what government says, you first pay the full price, you show me the invoice, I will refund you 500. I will give you cashback of 500. So when the cashback comes to the recipient, it is reducing only the cost of the recipient. It is not reducing the sale value. The sale value is total 1500 only. So when the supplier charged you or gave you the bill for this gas cylinder, he charged or quoted the entire 1500 price. There was no reduction in the price by the supplier. So logically, there should be no addition. So this is what is the explanation's logic. I hope this is clear to everyone. Yes.
सर,
Please.
जो सप्लायर है ना, जब इनवॉइस राइज करेगा सर, तो वो 1500 वैल्यू का राइज करके रिसिपिएंट को ही देगा, या फिर 10,000 का अलग करके 500 का अलग करेगा सर? जो
नहीं ना, वो
सब्सिडी
करेगा
दे
ही नहीं ना। सी, वही तो एक्सप्लेनेशन का पॉइंट है। एक्सप्लेनेशन इज एग्जैक्टली फोकसिंग ऑन दिस सिनेरियो कि सप्लायर को कोई लेन देन नहीं है, सप्लायर अपना पूरा पैसा लेगा। गवर्नमेंट को आपको बेनिफिट देना है, किसको? कंज्यूमर को। तो गवर्नमेंट क्या करेगा, बाद में कंज्यूमर के अकाउंट में 500 ट्रांसफर कर।
वो सेकंड केस है सर, वो सेकंड केस है। वो तो 1500 पूरा सप्लायर गैस लेगा, वो नहीं। पहले वाले केस में जब
अच्छा, तो पहले वाले केस में फिर सप्लायर क्या करता है? सप्लायर आपको 1000 का ही बिल रेस करता है, क्योंकि आपसे तो 1000 रुपीज ही आने और 500 से अलग से बाहर के एजेंसी से आने हैं, तो वो आपको 1000 का ही बिल देता है। इसीलिए तो ये पॉइंट आया ना कि आपको ये अलग से ऐड करना है, क्योंकि आपका जो ऊपर ट्रांजेक्शन वैल्यू है सबसेक्शन 1 में, दैट इज द प्राइस दैट यू आर शोइंग ऑन द इनवॉइस। सो I'll give you an example. Let us say I'm running this course of GST for 15,000, but some agency comes and tells me कि भाई, हमारे समाज के बच्चों ने अगर आपको ज्वाइन किया कोर्स हम आपको उसका एक नंबर या ये दे देंगे, तो आप उनको 10,000 ही चार्ज करो। मैं बोलूंगा सर मैं क्यों लॉस करूं, तो बोलेंगे सर आप मुझे सिर्फ उनके फॉर्म्स भेज देना, हम आपको 5,000 पे करेंगे। आई सेड फाइन। अब ऐसे केस में व्हाट आई विल डू इज, since I have to collect only 10,000 from the student, I will give him the receipt or invoice of 10,000। ये 5,000 का अगर वो बाहर वाले एजेंसी ने मुझसे मांगा जो मुझे रिइम्बर्स कर रहा है, तो मैं उसको इनवॉइस बना के दूंगा। That is where this particular point comes in, that where I am receiving this amount from some outsider, that I will be adding in the transaction value। It means transaction value मेरा 10,000 ही है, उधर मैंने 15,000 का इनवॉइस बना के आपसे 10,000 नहीं लिया है। अगर मैं वैसा करता हूं कि मैं इनवॉइस 15,000 का ही बनाता हूं, मगर आपसे 10,000 लेता हूं और बाहर वाले से 5,000 लेता हूं, तो अब मुझे वो 5,000 वापस 15,000 में नहीं ऐड करने, क्योंकि 15,000 में मैंने प्राइस को कम किया ही नहीं। अंडरस्टैंड दिस पॉइंट? आर यू गेटिंग दिस?
हाँ सर, यस सर।
सो ये सब्सिडी ऐड करने वाला पॉइंट कब आएगा, जब मैंने मेरे इनवॉइस में वो सब्सिडी माइनस करके इनवॉइस बनाया है, तभी तो आप उसे वापस ऐड करोगे। अगर मैंने इनवॉइस जैसे आपने कहा मैंने पूरे 15,000 का ही दिया, स्टूडेंट को बोला भाई तू सिर्फ 10,000 पे कर, मुझे 5,000 उधर से आ रहा है, उस केस में मुझे वापस 5,000 15,000 में ऐड नहीं करने, क्योंकि 15,000 ऑलरेडी पूरा प्राइस है।
यस सर।
करेक्ट?
यस सर।
सो दैट इज व्हाट इज पॉइंट ई। इज दिस क्लियर टू एवरीवन? एनीबडी हैविंग एनी क्वेश्चंस इन दिस? ओके, so now we take our break of around 15 minutes, and after 15 minutes, we will go to the remaining three clauses. Fine. let us proceed to the next clause, clause A. Yes, Yogesh, can you please read?
Any taxes, duties, cess, fees, and charges levied under any law for the time being in force other than this Act, the State Goods and Service Act, the Union Territory Goods and Service Tax Act, and the Goods and Service Tax Compensation to States Act, if charged separately by the supplier.
Now, what does clause A mean? Clause A simply says that if there is any other indirect tax other than any of the GST taxes like C, S, I, or even cess, if it is levied, it has to be added for the purpose of computing the GST tax. I'll give you one practical example of this. So when goods are imported, at that time, you all know, and that we are going to study later in the customs portion, that in case of import, various types of import duties are levied. Yes, Geet, you're right. So you have the basic customs duty, you have the uh, countervailing duty, anti-dumping duty. So these are the different duties which are levied by the customs law. Now, in case of import of goods, you also have the IGST. Now let us say the import value is 100 and the basic custom duty or the countervailing and all is 25. Now the question is, if IGST has to be calculated at 18%, it would be computed on what price? Now applying this 15 to A, 100 rupees, even though that is my actual import value, in that I will add the customs duty portion because of 15 to A. And then my value will become 125, on which I will compute 18%, which is my GST, that is the IGST. So this is what is the important point relating to 15 to A, that wherever any other taxes are applicable other than the GST taxes, and most important, they are charged separately. So supplier is also charging it, or you are paying it in that particular transaction. Then in this particular case, that has to be added. Point number one. Point number two. Now here there was a query or question. What would happen in case of TCS? Now we all know under income tax there is TCS on many items. So let us say I am buying scrap on which there is TCS. Now what will the supplier do? Let us say I have bought scrap worth rupees 1 CR. The supplier will add 1% as TCS. So he will give me invoice of 1 crore 1 lakh. That is the value plus the income tax which is collected in the form of TCS. Now a question came that whether that TCS should be considered as part of this clause, and while computing the GST, I should compute it on 1 crore 1 lakh. If I compute it on 1 crore 1 lakh, it means that 1 lakh TCS I have added as per clause A. So what is your answer? Whether TCS of income tax should be added and then GST collected, or GST should be only on the original value?
On the original value, sir. TCS पे GST नहीं होगा, sir.
Why? Why it is not 15 to A? Because if you are saying no, then you have to justify. 15 to A is the provision in front of you. Yes.
आई थिंक मतलब टीसीएस वो सब इसलिए कलेक्ट किया जाता है कि इंटीमेट करते हैं कि गवर्नमेंट की है ना ने ही हैज परचेड, वो उसके पास ट्रांजेक्शन का रहेगा करके, सेल भी रहेगा, वो धंधा कर रहा है. इट इज जस्ट एन काइंड ऑफ इंटीमेशन टू द गवर्नमेंट. तो
Because
उससे
TCS,
Yeah.
yeah, I think TCS is not any tax.
Okay. Answer is correct. So basic idea is, or the basic point is that TCS, TDS, these are not the taxes. And most importantly, they are not taxes on the supply. So these are a mechanism of collecting or recovery, and the amount which you all know about TDS TCS is never the actual tax liability. It is just an estimate which is collected from you. Now, when they are collecting from you this estimate, what they are collecting is not a tax, first point. Secondly, it is also not a tax on the supply. It is on the net profit of the entity, which may or may not accrue. Hence, firstly, it is not the tax in the first place. And secondly, it is not on the supply. Hence, because of these reasons, TCS is not to be included. But since there was confusion, there is also a clarificatory circular clarifying this point that TCS is not covered in clause A. Fine. Now we come to clause C. Please read.
Incidental expenses, including commission and packing, charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in respect of supply of goods or services, or both at the time of or before delivery of goods or supply of services.
Okay. Now, this clause C has to be read along with a very important provision of the GST law, that is the concept of composite and mixed supplies. Now, firstly, what does clause C covers? Now, clause C, out of all these clauses, is the most common clause which is applicable whenever we are doing valuation in our real lives also, and hence, obviously, whenever you come to interpretation of law. I'll give you again few examples. First example is, I am supplying you these mobile phones, the same example, which as per our supply, that is as per our understanding, as per our contract, I have to deliver it to your place, for which, besides my 50 lakhs invoice of or the value of mobile phones, I will be charging you rupees 20,000 for this delivery. Second thing, since these are electronic gadgets and I want that no damage should happen, I am putting it in a very special protective extra strength boxes, and the cost of that is 15,000, which again I am charging and recovering from. And then finally, for its proper handling, I have again taken the services of some helpers for whom there will be some loading, unloading, or handling charges, again extra rupees 5,000. So besides my 50 lakhs value of the mobile phone, I'm charging you for the transport, for the special packing, and for the handling, that is loading, unloading. Now in this case, clause C comes into the picture. Now as per clause C, what it says, what has to be added to your invoice value or to your transaction value? It says incidental expenses. Now, this is the keyword, that is incidental expenses. Further part is only a clarificatory part which says including. So this is clarificatory. Expenses like commission, packing, etc. So that you can very well ignore, because this is only a very small explanation type of a thing. So what it says, incidental expenses charged by the supplier to the recipient of a supply. So first thing is, I should again charge it separately. So I've done that in my invoice. I've added freight in my invoice. I've added packing, etc. And any amount charged for anything done by the supplier in respect of the supply of goods or services, or both at the time of delivery or before delivery. So either it is an incidental expenses which I have charged, or it is any such amount which I am charging because I have done something in respect of the supply. This is the most critical part, that whatever I'm charging to you, again, it should have a connection with this supply. Only then it can be added in this supply. So it should be in respect of the supply. So in respect of the supply means for the supply, like transportation, like packing, or maybe in some other cases, many times you charge for so many different extra charges. All these should be added and they are added as per clause C. But the moment I say they are added as per clause C, the next question that triggers is section 8, which is composite supply and mixed supply. Because if I'm charging multiple items in an invoice, and these items are all different items, like freight or transport is different, packing is different, these are all independent items. Now the question is, how should I treat it? So for that, section 8 says there is a concept called as composite supply and mixed supply. If whatever you have charged in addition is naturally bundled, then it is included as per section 8 and read with this clause C. Both are saying the same thing. Section 8 also says you will take the tax of principal supply, which is our main item, that is goods. Clause C also says similar thing. The only thing is that clause C says that you add it in the value of the main supply, so that automatically it becomes the value of the main supply. So automatically the tax rate of the main supply will be applicable. So somewhere if you try to draw an analogy, section 8 concept of composite supply and 15(2)(c are both talking of similar concepts but in a different manner. So clause section 8 says you will take the tax rate of principal supply. So obviously it is of my goods only. I'm applying that to freight charges also, to packing charges also, to loading unloading charges also. And similarly, 15(2) says a similar thing, that do one thing, add all this in the value of the main supply only. So automatically the value of main supply increases. So automatically the tax on this will be of the main supply. That is what is clause C, incidental expenses, which are charged by the supplier to the recipient and any amount charged for anything done. I hope this clause C is clear. So clause C should be read along with section 8 because both are complementing each other.
सर
Yes.
ट्रांसपोर्ट के रिलेटेड थोड़ा एक क्वेरी है सर.
बोलिए ना
सपोज
प्लीज.
तो सपोज अभी हम यहाँ पे ट्रांसपोर्ट के लिए हम लोग वैल्यू कलेक्ट कर रहे हैं रिसिपिएंट से, राइट?
ठीक है.
और और अगर मैं है ना नहीं जीटीए का सर्विसेज यूज कर रहा हूँ वो भेजने के लिए, वो ट्रांसपोर्ट है जो वो जीटीए है, तो मैं है ना नहीं अभी उस पे आरसीएम भी बनना रहेगा, राइट सर?
करेक्ट.
और मैं जो रिसिपिएंट से सिंस वो मैंने बिल में ऐड किया वैल्यू, तो रिसिपिएंट से जो आया उस पे टैक्स भी लगेगा.
करेक्ट.
यही है ना सर? करेक्ट ही है ना सर? ये
यस यस यस
अंडरस्टैंडिंग
करेक्ट है. करेक्ट है ना.
ठीक.
जीटीए पे आरसीएम भी है, फॉरवर्ड चार्ज भी है. अगर आरसीएम आप नहीं भी लगाते हो, क्यों? क्योंकि आपके सप्लायर ने यानी जीटीए ने फॉरवर्ड चार्ज का ऑप्शन लिया है, तो भी क्या होगा, वो उसके बिल में आपको जीएसटी ऐड करके दे देगा ट्रांसपोर्ट का.
हाँ. यस सर.
तो वहां पे भी आपने वो ट्रांसपोर्ट का जीएसटी भरा. सिर्फ उधर कैसे भरा? आपने सप्लायर को दिया क्योंकि उसने फॉरवर्ड चार्ज में वो ऐड करके दिया. और यही अगर सप्लायर ने बोला है कि नहीं भाई मैं फॉरवर्ड में नहीं भर रहा हूं, आप इसे रिवर्स में भरो, तो उस केस में आप खुद से उसी ट्रांसपोर्ट वाले का फ्रेट का आप आरसीएम में जीटीए का जीएसटी भर दोगे. सो इन बोथ केसेस ऑन योर इनवर्ड साइड देयर इज गोइंग टू बी अ जीएसटी. एंड प्लस क्योंकि आप ये रिकवर कर रहे हो सप्लाई अपने रेसिपिएंट से, सो एज पर दिस क्लॉज आप उसको अपने आउटवर्ड इनवॉइस में ऐड करते हो. तो आउटवर्ड इनवॉइस में जो ओरिजिनल सप्लाई है उसके वैल्यू में ऐड होके वापस उस पर टैक्स आ ही रहा है. सो यू आर करेक्ट.
ओके सर.
परफेक्ट. अंडरस्टूड
यस
बाय
सर.
ऑल. नाउ in this next clause, I want you all to be very, very minute in reading because people misunderstand this and it is actually something else, but people understand it to be something else. So please read. And now you all will be explaining me what is clause B.
Any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and not included in price actually paid, are payable for the goods or services above.
सिंपल ट्रांजैक्शन है या सिंपल प्रोविजन है. आपको बताना है व्हाट इट कवर्स. Clause B deals with what? Anybody?
It seems to be simple that the anything whichever the recipient is paid has paid in relation to that supply is to be included. It seems to be simple.
Nee, so can you please repeat, or can you give me example of what you said?
Is whatever the recipient pays in relation to that supply, that has to be included as per this
So
clause.
then is it not then clause C, or how it is different from clause C then?
Here the recipient pays. In
Okay, so
clause
you
B,
mean to say the supplier is not charging in the invoice?
yes, he is not charging in the invoice.
Okay, then to this point, I'll add one point which Ankit has put in the question. So he has given a scenario. I'll give you that scenario. So now you can tell me whether what you are saying and what scenario Geet has put is same. So let us say you want me to manufacture this mobile handset for you, but the condition of our supply is that the chip required in this mobile you will be supplying because you want to maintain a particular standardization. So you said that I want this mobile to be made from you, but the chip you would be supplying. Now, this mobile which I'm manufacturing, I'm charging you 40,000 rupees. And while manufacturing this, you had sent me the chip which is of 10,000. But I have not included the value of 10,000. Why? Because that chip was supplied by you to me. So I've added or installed that chip in this mobile phone and given you this complete mobile phone handset. But I've charged only 40,000. That is excluding the value of chip which you have sent to me. Now tell me whether this will be included as per clause B.
No, sir.
No,
No, sir.
but this is the expenses incurred by the recipient and it is for this supply only.
No. Here the supplier is not liable to pay for in that relation, right, sir? वो चिप का जो related जो भी liability है वो supplier का नहीं है ना उसमें.
Okay, so your interpretation and your answer is that in this example it should not be included. Okay,
Yes, sir.
fine. Sanjay, what is your answer? Because
Yes,
you explained this, no?
yes, I think it is the same as he said. I think it will not be included.
Then Sanjay, then I come back to the same question again. Then in your example or what you explain, what is that will be included?
So whatever he's liable to pay,
So
liable to
what it
pay.
is? Give me examples. So firstly, I'll answer this question. So you both are correct. This will not be included. Because you gave a simple answer that whatever the cost is incurred by the recipient, that has to be included. I agree to what you said. But then this
Some,
cost is also incurred by recipient, but you are saying this will not be included.
because something which is liable for the supplier uh, to pay it, but that amount is paid by the recipient.
Hmm.
Then it will be included. यहाँ पे चिप जो है it is not any liability नहीं है कि supplier के ऊपर कि वो पे करे उसको.
Correct. So let us say in this same example, had the supply agreement been that I have to supply you complete mobile handset. So everything I am supposed to procure, install, and assemble and supply to you. However, I am unable to procure the this particular chip, and you have some good connections whereby you said no problem. I will procure and send it to you. You install it and give it to me. I said fine. So where in the same example what we are discussing, I've just modified the facts. I was supposed to do everything. The motherboard, the chip, everything I was supposed to procure and install and properly assemble it and supply the complete mobile handset. However, because of all these geopolitical issues, I was not able to get the chip because my supplier was not competent to provide me the chip. So I expressed this particular problem. You said, no problem. You have some another source from where you will procure the chip and you will send the chips to me. I have to only install that chip in your phone. So obviously now in this case, since you are procuring the chip, my original phone price, which I was going to charge to you of 50,000, I said, okay, then I will reduce the price of chip from this and I will charge you only 40,000. So I have now charged 40,000. In this case, clause B comes into the picture. The price or the transaction value which I am showing is 40,000. Yes, it is the sole consideration because I am getting no benefit. The chip which you have sent to me is not for my benefit. It is to be installed in your phone only. So it is not a case where 15.1 will fail. 15.1 still applies. And 15.2b comes into the picture, which says that here originally the chip was supposed to be purchased, procured by me. So as pointed out by both of you, here the main thing that has to be seen is whether it was originally the supplier's liability. Answer is yes. As per the original contract, the cost of chip was my responsibility. I was supposed to procure it, but because of some changes, I'm unable to do it. And that is where the recipient comes in and says, no problem, I will do it. In such a case, obviously what I'll do, I'll reduce the price of the phone because some expense which I was supposed to do, which is obviously incorporated in my price, is now being met by you, done by you. So to that extent, I reduce the price. Then clause B comes into the picture. I hope this is clear to everyone. Yes, is this
Yes.
clear to everyone?
Yes.
Geet, I hope you are also clear with this, because what you are trying to explain is not in line with what I have just explained. So we are slightly on different footing, but I hope you have understood my point, which I am trying to put forth in this. Excellent. Now, clause B, students, practically is very, very rarely used. Why? Because it is very difficult to find out what originally I was supposed to do and then I change. Because many times if this happens, people actually change the contract itself. It will not happen that I will keep the original contract, but some material or part will be supplied by you and I will reduce the price. In reality, people don't do that. They cancel the original contract and they enter into a new contract. Now, if they cancel the original contract and enter into a new contract, then I believe 15.2b will not come into picture. They will now not add this 10,000. But as far as the law is concerned, if I go to the literal interpretation or the academic interpretation, then 15.2b is one of the additions, though practically I don't find it happening in industry in reality. Now, after we understand what are the additions which you should do in case these are not part of the price, now we come to what are the subtractions. Now in subtraction, basically you have only one thing that has to be deducted, that is the discount. So let us say my quoted price, my printed price is rupees 40,000. But I have come up with special Diwali offer where I say that if you buy this up to this date, and that also if you make payment through a particular credit card, then I will give you a 10,000 discount. So what is of 40,000 will be given to you for 30,000. Now in this case, the question is, since my original price is 40, maybe it will remain 40 in future also, but only for a limited period, I am giving this discount. So what will be the taxable value? As per 15.3, the taxable value will be 40,000 minus 10,000 and the tax will be on the net. So this is where 15.3 comes into picture. It says that the discount should be reduced. Now for reduction, they have covered only one item, that is discount. But there are two possibilities given in clause A, clause B. Clause A is simple, where the discount is given at the time of supply itself. Clause B is where the supply will be given later in the future. So let us go through this. Please read.
The value of supply shall not include any discount which is given before or at the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply, and after the supply has been effected, if such discount is established in terms of an agreement entered into at or before the time of such supply and specifically linked to relevant invoices, and input tax credit as it attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of the supply.
Now, discount is to be reduced. That is the clear mandate of 15.3. However, in 15.3, there are two clauses A and B. A deals with the discount, which I was just giving an example, that I have said that my price is 40,000, but if you place order in this period and make payment from a particular credit card, I will give you a 10,000 rupees discount. So you all avail this. Now, what does clause A requires? That if the discount is given before or at the time of supply, it will always be reduced. The only condition it has said that it has been duly recorded in the invoice. Normally, that is always done. So it means the discount should be passed on to you through the invoice only. So either you record the net price in the invoice or you record gross minus discount, like how all these malls and online apps are doing. Now, what is slightly tricky, critical is clause B. What does 15.3b says? It says that if the discount is given later on, which we also called as post-supply or post-sale discount. I'll give you a few examples of this. First, most common example is that again, I'm a manufacturer, you're a distributor. I am saying that boss, I am selling you these goods of rupees 50,000 MRP at rupees 40,000 so that you can sell it further and earn your margin. But if during the year, whatever purchases you are making from me, if you exceed the turnover of 10 crores, I'll give you additional 10% discount. Now, you are making all the efforts at your end to achieve maximum sales. Now your sales reach 9 crore 50 lakhs. Now you just try to ensure one thing, that your sales cross 50 lakhs further so that you cross my 10 crore benchmark and you become eligible for that extra 10% discount. So with extra efforts, you achieve this, your turnover crosses 10 crore. So you intimate me, ki sir, see, during this financial year, as instructed by me, he has crossed the turnover of 10 crores. Now what I'll do, I'll say, okay, fine, you have achieved it, but let me verify and all. So generally up till the end of financial year, we see all the transactions. Then if there are any rejections, returns, etc., all those things are adjusted. And I find out what is the final net turnover done by you. And yes, it is exceeding 10 crores. But by the time all this is identified, the financial year and everything is changed. Like for example, presently we are in September 2025. Right now, people are finalizing their books of 24-25 for all purposes, income tax purposes, for your company law purposes. And at this time only, when they are finalizing, they have finalized to whom they have to pass on this discount. So identify that, yes, you have achieved the turnover of 10 crore 40 lakhs. So I will now pass on this extra 10% discount on this 10 crore 40 lakhs. Now, since the financial year has changed, since the books of many of us has been closed, how this discount is to be given, that is what is provided in section 15.3b, read with the other provisions of the law. Now, what does 15.3b says? It says that this discount should be agreed beforehand. What it is saying, 15b subclause 1 says that this discount has to be deducted. So as we are reading subsection 3, it is talking about subtractions, but It will be subtracted if such discount is established in terms of an agreement entered into at or before the time of such supply. Means what? That there should be a pre-agreement. Like as I said, I had already intimated to you at the start, if you achieve a turnover of 10 crore, I will give extra 10%. If I had never intimated this, if this was not originally agreed, but now I tell you, ki boss, you just do one thing, ensure that you cross 10 crores, I'll give you this discount. Then the law says deduction is not allowed. However, let me inform you students, in the recently concluded 56th GST Council meeting, which happened on 3rd of September, this clause is proposed to be removed. So we'll wait to see how the amendment comes. But what is given by the council in its meeting is they are proposing to remove this clause. So after this clause is removed, then in future, this condition will not be there. What condition? That you should have a pre-agreement. However, presently, this is one of the conditions which is in fact creating a lot of problems practically, that the officers, when they find such type of a discount given, they want me to produce the agreement, which proves that yes, there was actually a pre-agreement. There was something decided already at the start, which said that I will be giving this discount in future. Now, this is what is clause B subclause 1. Further, it requires, and it should be specifically linked to relevant invoices. Means what? Now see, this entire turnover which you have achieved of 10 crore 40 lakhs is arising from multiple invoices which I have sent. Sometime you place order of 2 crore, sometime you place order of 180 and so on. So whatever order you are placing, that total is 10 crore plus. Now, when I have to give you this discount, again, this same subclause 1 says that it has to be linked to the relevant invoice. Means while giving the discount, I have to prepare a detailed list that, okay, in your first invoice, which the value was 2 crore, the discount is 10%. So it is 20 lakhs. In another invoice where the value was 1 crore 80 lakhs, 10% is 18 lakhs. So I have to link this with respective invoices. This is also proposed to be removed. In short, entire clause 1 is proposed to be removed. So henceforth, after this amendment happens, even if there was no pre-agreement, and even if I am not linking this discount with a particular invoice, it will be allowed. Now, the second subclause is again what is creating a lot of practical challenges. What is second subclause saying? The input credit, as is attributable to the discount on the basis of document issued by the supplier, has been reversed by the recipient. Now, what is this? I am now giving you the discount. Firstly, I am giving the discount on the basis of a document issued by the supplier. Now, they have not named the document. Obviously, this document is the credit note. Now, again, an amendment is proposed in this part also, that they will go to section 34, which is the section relating to credit note. And over there, they will link with this condition. So in clause 2 also, there is an amendment proposed that here they will make reference, instead of saying on the basis of document, they will say credit note. And in the credit note provisions also, they will give reference to this. Now, what is this point saying? If I have to show this a discount, obviously as a supplier, now see, my supply happened last year. Throughout the year, through different invoices, I made this supply. And now I'm giving you that 10% discount, which is related to so many past invoices. How I will do it? Credit note chapter says I will make a credit note. And in this credit note, I will show, at least as per the present clause 1 conditions, show the relevant invoice details. And for every invoice, how much was the amount and 10% is coming to how much. This is how I should prepare a document. That is a credit note. This is the present condition. After amendment, this linkage with invoice will go. I'll simply prepare a credit note saying the amount of total 10%, whatever it comes to. So once subclause 1 is removed, linking with invoice will go, and also pre-agreement condition will go. But here in subclause 2, they are proposing to add linkage with the credit note provision, which is presently missing. So presently there is no reference of credit note. In future, there will be reference of credit note, or they will say as per section 34, that is a credit note that will be brought here. Now, what is important is, now presently the condition says that I should prepare this credit note. Now, when I'm preparing this credit note, I'm reducing my sales value. So to that extent, I'm benefited. But then the counter condition which is given here is that you, that is the buyer or the recipient, should also proportionately reduce your ITC, because you had claimed ITC on my original sales invoices. Now, if I'm reducing the original sales value by way of this credit note, so I'm reducing my sales, so you should also reduce your purchase, and hence you should reduce your ITC. Now, to ensure this, or I'll say to enforce this condition, there is a circular which is saying that key, I will give you credit note, and from you, I will take a confirmation, which if the amount is less, you can give on your letterhead. If the amount is more, you'll have to take a confirmation from your CA and give it to me, where you will be giving me this in writing that yes, on the basis of this credit note given by me to you for this discount, you have also reduced your ITC. This confirmation is what is required presently to satisfy subclause 2, which is in the form of a circular. Again, in the council meeting, they are proposing to rescind that circular, and they are proposing to bring a new circular to give more clarification to the new provision. But presently, the provision is that I have to prepare a credit note. Through the credit note, I have to pass on the discount. I will reduce my output supply. So you have to also reduce your ITC. And for this, presently the circular says that I will take a confirmation letter. This is what is 15(3)(b)(2). Anybody, any questions or doubts? Please ask.
सर सपोज अभी जो सप्लायर है वो क्रेडिट नोट इश्यू कर रहा है विदाउट जीएसटी का, मतलब डिस्काउंट दे रहा है लेकिन उसमें जीएसटी का नहीं है, सप्लायर अपना लायबिलिटी कम नहीं कर रहा है, तो फिर अब रेसिपिएंट की भी रिवर्स करना पड़ेगा आईटीसी?
नहीं थी, फिर अगर आप वैसा कह रहे हो ना, सो टेक्निकली it is not fitting in this clause itself. See, because what this clause is saying will reduce the value. Value reduce करना मतलब मैं मेरा GST liability कम कर रहा हूँ, correct?
Yes, sir.
So it means they are talking about a GST credit note. But what you are saying is again an old circular where there was a lot of confusion with this. So there is an old circular which says that supplier has an option that it will issue a credit note, which let us call as commercial credit note or accounting credit note. That is where, as you just pointed out, I will not be showing the GST portion. So I'll only show the discount portion. Let us say the 10% discount comes to rupees 1 crore 10 lakhs. So I will give you 1 crore 10 lakhs credit note, but on that I will not show GST. Now, if I'm giving this type of a credit note, it is not a GST credit note, it is a commercial or an accounting credit note. And it is very well accepted as per another old circular. Now, if I give that type of a credit note, it is not fitting in 15(3)(b) itself. Why? Because if I'm giving a non-GST credit note, I am not reducing my value. So my value remains the original value. And since I have not reduced my value, I am not claiming the benefit of reduction in GST on output. Hence, at your end, you are also not required to reverse the ITC on your purchase. Fine, beta?
Okay, sir. Yes, sir.
Anybody else has a question on this? No
Sir,
question? Yes.
जनरल है, अभी बिजनेस पर्क्विजिट्स आते हैं ना सर, बिजनेस पर्क्विजिट्स,
हाँ
194 आर के नीचे कंपनी जो काटते हैं
Correct.
टीडीएस का बिजनेस का, उसके ऊपर भी जीएसटी लगता है क्या सर? टैक्स
Yes.
भरना पड़ता है?
Now, this is right now a very hot litigation point. Now, in that, we have to first understand what exactly is the nature of that perquisite. One, see, perquisites can be of two types. One, you are attending some conference where the company spent on you the amount for your travel, for your stay, for your food, etc. And that was done because the company had kept a dealer's meet. Now, this is very common. Now, where the company is spending on you for any such thing where the company is doing its own promotional or its own business event. But that is 194R perquisite because the company is showing that expense in its books. So as per 194R, it has to deduct TDS. In that particular case, there is no tax liability as per me. Second type of perquisite is where actually the company is giving you some benefit. Like because of you, let us say you are declared as the most outstanding distributor of this year, for which you are given a electric EV vehicle as a prize or as a recognition. Now, this is also a perquisite given by the company, or let us say you are given a foreign tour package. Now, when any such type of benefits are passed on to you by the company, which is also a perquisite, which is again liable for 194R TDS of income tax, in such types of perquisites, then the question comes whether it is a separate supply or not. So, firstly, we have to bifurcate the 194R perquisite into two categories. One, where the company has spent on any of your travel, stay, etc., but where you are going was a corporate event, a company event. And as a dealer, as a distributor, you went there for participation. That is one type. I understand there is no supply involved in that. The second type is where you are given some add-on benefits. Like as I said, some vehicle is given, some travel package is given. This is where I believe there has to be a GST because it is like the company giving you extra commission. So normally for whatever sales you are making, the company has already given you commission. Here, the company is giving you extra commission. In such a case, I believe there will be a supply and there will be a GST. This is my understanding on this 194R perquisites issue. Now, this council meeting, along with this particular amendment, has also given a recommendation that there should be or there will be a circular even clarifying on all these things. So I'm expecting that the new circular which will come, firstly, after the amendment that is made in this section, will also be covering the point that you have raised, what will happen of 194R perquisite related issues. Fine?
Okay, sir.
Yeah. But I have shared with you what is my understanding as to whether it will be liable for GST or not. Now, so these are different aspects of section 15. Let us go through this from our detailed part. And wherever there is, now see, this is what is the point which Geet you are asking. This is exactly the point that you are asking. Can you please read for me, Yogesh?
Valuation of supply made by a competent manufacturer using molds and dies owned by original equipment manufacturer OEM sent free of cost to him.
So,
While
Geet, this is
calculating the
exactly the point which you were which we are trying to put forth when we were discussing 15.2b, correct? That the recipient is supplying some material, some item free of cost. Now, here I am your component manufacturer. You are the OEM. OEM is, let us say, you are Tata Motors. So you are the original equipment manufacturer. Now, in manufacturing a Tata motor car, you require so many small and big parts. So let us say I am preparing one of the sub assemblies for you, which you will be installing in the Tata motor car. Now, when I'm preparing this sub assembly, the circuit board which is required for this assembly is being supplied by you to me free of cost. Now, the question is whether this has to be added in my transaction value or in my service charge which I'm billing to you. The answer is generally the answer is no. As I explained at that time also, that if there was no such contract whereby I was supposed to procure it, if there was no such contract, means the contract is such that it is already decided right from day one that you are supposed to supply that circuit board or that chip, and I have to use that particular item supplied by you and prepare my sub assembly. That is already what is how the understanding is. Nothing is to be added. But yes, if originally it is decided that I have to procure it, I have to get it and use it, but since I am not able to do it, hence you supplied from your side and I reduce my bill, then only 15(2)(b) comes into picture. Please read.
While calculating the value of supply made by the component manufacturer using molds and dies owned by OEM set free of cost to him, the value of such molds and dies shall not be added to the value of supply made by him because the cost of molds dies was not to be incurred by the component manufacturer and thus does not merit inclusion in the value of supply in terms of section 15 subsection 2 clause B. However, if the contract between OEM and component manufacturer was for supply of components made by using the mouse dies belonging to the component manufacturer, but the same has been supplied by the OEM to the component manufacturer on FOC basis, the amortized cost of such mouse die shall be added to the value of components.
Fine. So I hope this is clear. So only when originally it was to be procured by me and used in this particular goods, but for some reason I could not procure it, so you provided it to me free of cost. In that case only it has to be added as per this particular section. This has also been clarified by way of a circular number 47. Now in the second main part, as I said, 15(2)(c) is the most common item. And over there also I said that commission packing is just given as an example. There are n number of items which can be included, and that purely depends upon one single criteria, that it should have some linkage with this particular transaction. So whatever I am charging in addition to the price of my goods and which is related to this particular supply, that is what 15(2)(c) says has to be included in the value of supply. But I had already explained to you at that time itself that this has to be read in consonance with section 8, that is whether this amounts to a composite supply or not. Because if it is not amounting to a composite supply, then the transaction or the treatment would not be as per 15(2)(c). It has to be done separately, distinctly. Now, for this post-supply discount, which we were just discussing, as I said, that there are circulars clarifying this. We'll just read this part. Can you please read this part for me?
Presently, in case where the amount of tax, CGST, SGST, IGST, and including compensation cess, if any, involved in the discount given by the supplier to the recipient through tax credit notes in a financial year does not exceed 5 lakh, supplier needs to procure an undertaking certificate from the said recipient that the said ITC attributable to such discount has been reversed by him, recipient. If said amount exceeds rupees 5 lakhs, the supplier needs to procure a certificate from the recipient issued by a chartered accountant or a cost accountant certifying that the recipient has made the required proportionate reversal of ITC at his end in respect of such credit note issued by the supplier. This requirement to procure certificate undertaking is temporary till the time a functionality facility is introduced on the common portal to enable the supplier or the tax officer to verify the compliance of the condition of proportionate reversal of ITC by the recipient under section 15(3)(b). It may be noted that this facility of invoice management system has been developed by GSTN for October 2024. However, this facility is optional and not made mandatory. A commercial credit note is not governed under GST.
Fine, that is okay. So this is what we were discussing. As I said, there is an old circular which mentions that for the purpose of satisfying the condition 15(3)(b) subclause 2, you have to take a confirmation from your recipient that the recipient has reversed the credit. Now, how this confirmation has to be taken? They have given a value limit. The value limit is 5 lakhs. If the amount of CSI involved is not exceeding 5 lakhs, then the supplier will give the confirmation on its own letterhead. No CS certificate is required. However, where the amount, the GST component exceeds 5 lakhs, then the supplier has to give this confirmation by getting a certificate from a chartered accountant, cost accountant, where the CA or the CMA will certify in their certificate that yes, this recipient has actually reversed the credit. So this is the circular which I was referring to you at that time. Now Ankit has asked me a question. Sir, is OEM and component manufacturer related? Answer is no. See, we already studied the definition of related person. Now in the definition of related person, only that scenario is covered where either we are having control over one another, that is not the case. We are partners, that is not the case. We are employer-employee, that is not the case. The only case which I believe is left is the last one, that where I am your sole agent, sole distributor. But again, Ankit, if you remember, I had clarified at that time that point is many times misunderstood. Why? Because I may have multiple agents, I may have multiple concessionaire, I may have multiple distributor. All of them will not be considered as a related person. Related person is only if I have one single distributor. In this particular case, if I am getting my components manufactured from any outside person who is called as a component manufacturer, that person never becomes my related person except where any of these specific conditions are satisfied. So please understand this. Until and unless any of these specific conditions are satisfied, it will not be covered over here. Is this fine?
Yes, sir. Clear.
Okay. Now, one second. I think ma'am is there. Ma'am, good morning.
Good morning, sir, and good morning, students. Actually, discount is yet to be taken. Okay. Actually, I
So
had
that's what I
planned.
was asking. Should I take this discount now, or will you, or do you want to start your quiz?
Sir, you made.
Hey, ma'am,
You made.
discount is taken, ma'am. No problem. I have explained them the discount. The entire explanation is done. Now we are only going through some of the circulars which are there in our module.
Sir,
But
you may explain this discount, then we will go through the quiz.
okay, fine. Now, students, again, with respect to section 15.3b, that is the post-supply discount, there are different types of manner in which this post-supply discount is given. Now, one such type is, or few of the types are covered over here. Now, what is given? First, staggered discount. Second, periodic year-end discount or volume discount. This is the same example which I was giving you, that I have given you a turnover to achieve of 10 crores and you have achieved that turnover. That is what is this periodic or year-end discount. Then there is one more which is secondary discount. Now, what is the point given? Question is simple, that whether such discounts which are given in different forms like buy more, save more, whether such discounts are allowable as per section 15.3. The answer is yes. So discount may be given in any manner. Discount may be given in any format. Like I may directly give a straightforward discount 10%, or I may say that only if you are buying off a particular limit or if your purchasing exceeds a particular limit, then the discount will be given, which is staggered discount. Or I may give you a target that, okay, you achieve this much turnover in this particular year, then I will give you the discount. The turnover may be in terms of quantity or the turnover may be in terms of value. Once you achieve that, I give you the discount. Or it may be secondary discount. What are secondary discounts? Secondary discounts are those discounts which are not known at the time of supply. Now, this is the only thing where there is a problem. However, if the discounts are of any of these types which are pre-informed, pre-intimated, you know it right from the beginning that yes, if I cross a particular range or if I cross a particular turnover, I will become eligible for discounts. Such discounts are always to be deducted. Now, the only challenge is with the secondary discount part. However, this secondary discount part right now is a challenge because of section 15.3b condition in subclause 1. But I've already informed you that the present council meeting has proposed to remove that subclause 1 condition. That is, there has to be a pre-agreement. Once that is removed, even the secondary discounts which we are discussing now will be eligible. But right now today, since that condition is there in the law, that is, you have to have a pre-agreement. In that case, if there is no pre-agreement and the discounts are not known at the time of supply, but later on they are given. So let us say I never informed you that if you achieve a target of this much, I'll be giving you a discount. But subsequently, I say that, okay, fine, I've decided to give you all a discount of 10%. Then such secondary discounts cannot be deducted from the value of supply. Why? Because such discounts are not pre-agreed, which is the condition in 15.3b1. It may also be noted that financial commercial credit notes can be issued by the supplier even if the conditions mentioned in 3b are not satisfied. So this is what we have already discussed, that the suppliers can give you a commercial credit note. So wherever 15.3ab condition, sorry, not ab, 15.3b condition, subclause 1 or 2, any of the conditions are not satisfied, the other way of giving discount is you can always give a commercial discount, a commercial credit note, that is a credit note without GST, and in that fashion you can pass on the discount. So when you're passing on the discount using a commercial credit note, it is never treated as a discount under 15.3. In short, the supplier is not reducing its value. The supplier's value, the supplier's turnover remains intact. Fine. Then another point is no claim bonus. Now, what is this no claim bonus? See, these are, according to me, different marketing gimmicks. What are these marketing gimmicks? So let us say you have taken an insurance policy, which is, let us say, a fire insurance policy or your vehicle's insurance policy. And you know that it has to be renewed every year. Now, every year, when you have to renew this particular policy, many times the company gives a particular type of a special benefit, which they call as no claim bonus. So what is this no claim bonus? They say that, see, our insurance premium for your vehicle is 25,000. But since you have taken insurance in past 3 years and there was no single claim made by you, so in this year, I am giving you a bonus of 10,000. Now it appears that they are giving you some extra benefit. There is no benefit. It is a different way of giving you discount. So instead of charging the entire 25,000 this year, they will adjust the 10,000 bonus and effectively they'll be charging only 15,000 rupees. So whatever no claim bonus they are giving, that no claim bonus is nothing but a deduction under section 15.3 because it is a discount given at the time of supply. So even though it has been framed or worded as a no claim bonus, what is to be understood is it is nothing but a different way of passing on the discount. Fine. So we have completed the entire section 15 with all its subparts. Now in the next class, we will be going to the valuation rules. So now since it is the quiz time, I hand over the further part of this session to Swati ma'am. And I request everyone again to please go through the chapter, every part of it, though we have discussed it, but you please go through it. And next class, we go to the next part, which is the valuation rules. So that's it all from my side. Good day, everyone. Thank you very much. Good day, ma'am.
Good day, sir, and good morning, everyone. And thank you, sir, for the wonderful session. Today, I have planned to take GST questions quizzes for the content prior to the valuation rules. That is why I was, because for valuation rules, we will take another session. So all the 3 students have already joined the quiz link, and all the remaining students, please join so that we can start. 4 have joined. Yogesh Agarwal is left and Sanjay. Yogesh, you have joined. Good. These are the students. Even I am, know the name because in the previous session you were there. Sanjay, Ankit had joined. Geet Chauhan joined. Chitra had joined. I think all of you have joined. Shall we start the session? Are you ready?
Yes.
Please let me know through the chat. Okay, let us start. First question is there, author. Wholesale price of 1 MT of cement sold by X Limited in the ordinary course of business 7,000. Price of 1 MT of cement sold by X Limited to unrelated customer 700. Value of supply made by X Limited to buy. And 28 seconds is left with you. 2 students have already answered. This is an easy question. Five have answered, one is left, and only 4 seconds. 4, 3, 2, 1. Let's see the leaderboard. On the top, first rank is backed by Chitra, second Yogesh, third Sanjay, and fourth is Ankit. Let's see the correct answer. How many students have given the correct answer? 4 students have given the correct answer, and one have given the incorrect, and one student has not attempted this question. That is very bad. All of you are required to attempt the question, right? So now, let's see the full question again. Wholesale price of 1 MT of cement X limited in the ordinary course of business is 7,000. In our case, value of supply, the correct answer is value of supply made by X limited to Y is rupees 6,700. What is the reason? Because as we know that value of supply is the transaction value, and what is transaction value? That is the price actually paid or payable for the goods. So even though the wholesale price is rupees 7,000, but the transaction value is rupees 6,700. That is why the value of supply made by X limited to Y limited is rupees 6,700. Now let's move to the next question. Next question is there on your screen. Grant-based contracts with ABC company to conduct a dealers meet. In furtherance of this, grant-based contracts with vendor to deliver goods or services like water, soft drink, audio system, projector, catering, flower at the venue on the stipulated dates at the stipulated prices. Grant-based is liable to make these payments as contracted. The soft drink supplier wants payment upon delivery. ABC companies agrees to pay the bill raised by soft drinks vendor on grant-based on receiving the crafts of soft drinks. The amount is not billed by grant-based to ABC company. Whether payment made by ABC to soft drink supplier would be added to the value of supply provided by grant-based to ABC for payment of GST. And the time is over. So again, wow, good. Yogesh is at the top, followed by Ankit second, Sanjay third, then Chitra and Geet Chauhan. So the correct answer is given by 4 students and 2 have not attempted. That will not work. Please, all of you who are there on the online, please attempt the question. It doesn't matter whether your answer is right or wrong, because even if your answer will get wrong, it is basically it is not your real examination. Even if you will commit mistake here, you will learn from it and you will perform better in the examination, right? So let us see the full question. In this case, yes is given by yes, right? See, in this case, the amount will be added. The correct answer is that the amount will be added to the value of supply, even though, please note that even though this amount is not billed by grant based to ABC, it would be added to the value of supply provided by grant based to ABC company for payment of GST. Why Section 15, subsection 2, clause B, payment made to third parties by the recipient on behalf of supplier in relation to the supply. I hope it is clear to you. Now it's time to move to the next question. The selling price of a pen is rupees 50. For pens sold to students in government schools, a company receives price-linked subsidy of rupees 30 per pen from an NGO, so that students pay only rupees 20 per pen. What would be the value of the pen for the purpose of GST computation? Twenty seconds left. Option A 50, option B 20. And again, Yogesh is at the rank 1, rank 2, Sanjay, 3, Ankit, 4th, Chitra, and 5th is Git Chauhan. And 5 students have given the correct answer, that is rupees 50. And one has not attempted. I want to know who has not attempted. I think it is 283196. Please mention your name. 283196. See, the answer is 50 because in this case, the subsidy is a non-government subsidy, right? Here, the subsidy is given by a NGO, and in case of subsidies, only the price-linked subsidies are includable, and blanket subsidy are not includable in the value. Also, not if subsidy is given by the state government or central government, it is not to be added to the value of supply. Next question. Selling price of a pen is rupees 50. 4 pens sold to students in government schools. A company receives price-linked subsidy of rupees 30 per pen from state government, so that students pay only rupees 20 per pen. What would be the value of the pen for the purpose of GST computation? Option A 50, option B 30. And these two are the similar questions. 38 seconds is left by you. Again, rank 1 Yogesh, rank 2 Sanjay, rank 3 Ankit, and Chitra and Geet Chauhan. In this case, uh, correct answer is rupees. Actually, this is a case of subsidy given by government, and if subsidy is given by state government or central government, it is not to be added to the value of supply. So the price linked subsidy is rupees 30. So basically, the amount, the value of the notebook would be rupees 20, 30. You may read 30 as 20 because the value of the pen is would be rupees 20 because 30 rupees is a subsidy which is given by state government and it is not to be added to the value of supply as per section 15, subsection 2, clause E of the CGST Act 2017. Next question there on your screen. Royal Biscuit Company gives a discount of 30% on the list price to its distributors. Thus, for a carton of spice biscuits in the tax invoice, the list price is mentioned as rupees 200, on which discount is of 30% is given to arrive at the final price of 140. Value of supply is option A 200 and B 140. Discount has just now been explained by Vishal sir. So let me check how many of you have understood it properly. One student is left, and this time 283196, please mention your name. This time I want answer from all of you. These are the very simple questions, but they test the applicability of the key provisions. Again, Yogesh on the top, second Sanjay, third Ankit, fourth Chitra, fifth Geet Chauhan, and 283196. Please mention your name and please attempt the questions. Right. And the correct answer is yes, 140 rupees. And all of you who have attempted the question, you have given the correct answer. Discount is allowed at the time of supply and it is shown in the invoice. So it is allowed as deduction from the value of supply. Next question. Last 27 seconds left. The time is over. Yogesh first rank, second Sanjay, third Ankit. The same similar pattern is repeated again and again, and I am expecting change in it. So all the students, a few more questions are left. Please try to give the correct answer so that you can also be in the top three candidates. It says, examine the correctness of the statement, and all of you have given the correct reply. Yes, it is not to be included in the value of supply. Why? Because tax collected at source, this is in the nature of an interim levy, not having the character of tax. So it has been clarified by CBIC via a circular that for the purpose of determination of value of supply under GST, TCS under the provisions of Income Tax Act 1961 is not to be includable, right? So next, move to the next question. How should the supply made by a component manufacturer be valued when he uses molds and dies owned by the original equipment manufacturer sent free of cost to him? Option A, includable. B is not includable. And I am giving a hint. It is based on a circular. I have given the extended time for you to answer this particular question because it involves the application of a circular. You can go through the circular and give your answers. Five students have already answered, so I think without taking much time, we should see how many of you have given the correct answer. And if required, we will also discuss the explanation of it. So I am ending this question. Right? And again, rank 1 Yogesh, 2 Sanjay, and third is Chitra. And let us see how many of you have given the correct answer. Not includable. Very good. 4 students have given the correct answer and 1 have given the incorrect answer. Let me briefly discuss it with you. See, circular number 47/21/2018, GAC dated 8th June 2018. This situation, this concept has been clarified by this circular. It says that when calculating the value of supply made by component manufacturer using molds and dies, which are owned by original equipment manufacturer, which are sent free of cost to him, the value shall not be added to the value of supply because the cost of molds and dies was not to be incurred by the component manufacturer, and thus they will not be included in value of supply as per section 15 subsection 2 clause B. However, I also explained the other part of this circular. If the contract between original equipment manufacturer and component manufacturer was for supply of components made by using the molds and dies belonging to the component manufacturer, right? If the molds and dies belongs to the component manufacturer, but if they are supplied by the OEM to the component manufacturer on FOC basis, then the amortized cost of such molds and dies shall be added to the value of supply. So let's move to the next question. Company offering 20% discount for single purchase above rupees 10,000. What is the treatment of discount for computation of value? It is to be excluded or not to be excluded? Last 30 seconds are left, and all of you 5 students have already answered. So let us end it. Yogesh on the top, Sanjay, then Chitra, rank 3. And to be excluded, 4 students have given the correct answer and 1 have given the incorrect answer. See, the concept of discount has just now been explained by Vishal sir to you. In this case, when company offers 20% discount for single purchase above rupees 10,000, it is a case of staggered discount. where rate of discount increases with increase in purchase volume. See, when there is a sale in January, during Diwali, in Navratri season, or in January, what we see when we visit a mall or any, any outlet, we see that if you purchase any of your dress, or say shirts or trousers, till 5,000 rupees, you will get a 10% discount. If your volume of purchase is above 10,000, you will get 20%. And as your volume of purchase increases, the amount of discount increases. So these discounts are shown in the invoice itself, and they increase with increase in purchase volume. So same are excluded to determine the value of supply. Next question is there on your screen. Company offering additional discount of 1% on purchase of 10,000 pieces in a year. What is the treatment of discount for computation of value? Option A, to be excluded, and B, not to be excluded. So 5 students have answered. And last 15 seconds are left with you. And the time is over. On the top now we have Yogesh, second rank Sanjay, third is Geet. Good. This is a change this time. Geet has bagged rank 3, fourth Chitra, fifth is Ankit. And the correct answer is yes, it is to be excluded, and it is given by 4 students. See, let us see this question. Company offering additional discount of 1% on purchase of 10,000 pieces in a year. Which type of discount is this? This is the type of volume discount which is generally offered by suppliers to the stockist. This discount is established in terms of an agreement which is entered at or before the time of supply, and it can also be specifically linked to the invoices, even though it is not shown in the invoice, because the actual amount of discount, it gets determined only at the year end, that whether you have purchased 10,000 pieces or not. But yes, these discounts are excluded. But what are the conditions which are to be satisfied for as per section 15.3, that you have to reversal of ITC is to be done by the recipient of supply. So considering the conditions satisfied, this discount, this volume discount is to be excluded from the value of supply. This is the second last question of the day. In fact, I think by now these rules have not been explained in today's class. So this is this you can see the last question for the day, and it will determine who is at the top of the leaderboard, who is the winner of the GST Titan quiz today. So please attempt this question very carefully. This is the last question. After selling a product, company revalued the product at a lower value and issued credit note to the buyer for the differential amount. What is the treatment of discount for computation of value? Option A, to be excluded, and option B, not to be excluded. Last question, and 10 seconds are left with you. And the time is over. Rank 1, Yogesh. So Yogesh is the winner of today's GST Titan quiz. Rank 2, Sanjay. Rank 3, Geet Chauhan. Congratulations to the top 3 rank winners. And rank 4 is Ankit. And rank 5 is Chitra. Very good, all of you, all the students who have participated, they are winner in themselves. Because if you participate, you will learn more. And if you will learn more, you will perform better in the examination. So let us understand this last question. It is not to be excluded. Why this is not to be excluded? Because this type of discount is in the nature of secondary discount. These discounts are not known at the time of supply. When the supply is offered, it is already over as per the agreement made or at before the time of supply. This is not known at the time of supply, or they are offered, because they are offered when the supply is over, because in this case the company revalues the products at a lower value after selling a product. So the product has already been sold and it was not known at the time of supply. So this discount is to be excluded from the value of supply. So this way we have ended up with the GST Titan fees for today. And may I have the feedback from you, as I always request you, because it helps us in knowing. Geet Singh, thank you so much, ma'am, for MCQs. Really helpful in revising the concepts studied during the examination. Thank you, Geet. Your words motivate us, and it helps us in self-assessment and the deciding the right methodology of teaching. Then let us end this assessment. Very good. First rank, Yogesh. Congratulations. Rank 2, Sanjay. And rank 3, Geet Chauhan. Good. Keep it up. And this we can say, keep growing. And good to see that you have participated. Please share your feedback in the feedback form. And in the next class, we will take up, sir will take up the valuation rules with you. Please understand them very carefully, because valuation rules are important and they are covered at the final level only. So you must not have been gone through these valuation rules at intermediate. So thank you, friends. Thank you and all the best. Yes, session is over. Thank you. Have a nice day, all of you.